Good. Welcome you all once again. Today we'll be looking at the optional section of your paper, where you have 5 questions, but you're required to answer 3 of them. So today, God willing, we are going to look at the three out of the 5. Those. Even though all the 5 I have provided questions with their solutions for you. Yes, the solution will come later after the intervention. Good. Okay, so one of them is the break even. So you go straight and then look at the break even section. Good. So that is it. Let's go to the question. Then let's let the break even question. So for break even, I'll start with the question 2. But before that, I will walk you through. I have 3 persons there. Out of the 3, you have to focus on 2, but there's one that I want you to take care of. So let's see. The name of the question is question 5, Agroversor. Good. So yes, questions on break even. Agroversor question 1. Okay, so that is the question. So this is the question that we are going to do. No, this one is your work. So I'm just going to highlight on the sensitive part. Kindly try the D part for me and you will smile. You will find the D part. Please, the D part, let me highlight on it. I hope everyone can see the D part of the question. Kindly try that one for me. We have, if you go through the video, the break-even video, we solved Agroversor. We solved Agroversor, but didn't, the D part by then was not there. Can you go to the D part for me? Let me see if I can do something here. So kindly go through. If there's any difficulty, kindly let me know. Okay. So I'll start from the question 3. I'll start from question 2 and question 3. Then I have to scan through and then so that we can finish early. Great. Okay. Okay, so that is it. Please, and please again, kindly go through this for me, okay? And you'll be fine. But question 1 is yours. Your question 1 is yours. So let me quickly go to question 2. Question 2 was the coupon question. So I think, yes, a couple question, the solution is available. It's in the break-even video. Just that I've added, I think 2 or 3 issues to it. Yes, I've added 2. So the one in the bold alphabets, I think that's the one I've added. So that I can go straight to question 3. Good. Please, what do you suggest? I want to go straight to question 3. For those 2 questions, we've solved them. So we are going to scan through question 2. Question 2 is about We are done or I am done. Good. So this is question 2. It's about I am done limited, a manufacturing organization has budgeted profit statement. Good. This one is called profit statement. So check the question. This is a profit statement. So you can see some structured cost, then revenue. So that makes it a profit statement or income statement for the next financial year when it's expected to be operating at 75 capacity level. Sorry, 75% level of capacity. So that is it. Now, if you go to the question, tell you that break-even point, calculate the following. The break-even point in units and in value. And then the contribution to sales ratio. Then the number of units that must be sold and a profit of 52,000. So at a profit of 52,000, what will be the unit? So that's it. Then prepare the budgeted income statement. If the company operates at full capacity, the company operates at full capacity. So if you have the hard copy, you can make it at full capacity. A. Explain two usefulness and two limitations of break-even analysis. So two uses of break-even and two limitations or challenge. So it's gone through the financial statement and you are done. But please, I repeat and repeat again. Kindly go through this one for me. Almost every hour I will stretch you that kindly go through it for me. Almost every hour I'll tell you, kindly go through for me. Okay, sorry, I'll forward it to you. It's on the page. It's on the page. Okay, so sorry. Okay, so let's continue again. Good. So please go through this one for me. Why am I saying this one? There's no income statement that will provide a reliable guide to us. That's I say, go through it. This one, there's income statement. So at least you provide a reliable guide when I ask us to prepare the income statement here. So break-even point in units and in value. How do you calculate break-even point? How do you calculate break-even point? So break-even point will be break-even point. In point, it means that you have unit and value. That's the meaning of the word point. So break-even point. Good. Okay. So break-even point. Break-even point. No shortcut. We have units. Then we have what? Value. How do you get the units? Then how do you get the value? The units is equal to the fixed cost divided by the contribution per unit. Then you are done. Good. So this one is equal to the fixed cost divided by contribution per unit. So what's the fixed cost in this question? Let's go and look at the fixed cost. As the first, when they give you the question, please, when you go and you see income statement like this, as soon as you are reading, identify about 4 items. If you get them correct, or even if you know how to find them, please, you are safe. And if you know how to find them, you are safe. So take note. Now, to get the fixed cost, what do? Go to the income statement. There's a fixed cost here, 42. There's another fixed cost here, 36. So putting them together, you get what? 78. Good. You get 78. So therefore, the fixed cost is equal to 78. So that's the first thing to look out for. And look for the units. It's here, 9,000. Selling price, 32. Good. Now we know that in break-even, fixed cost will be divided by the contribution per unit. So let's go and calculate the contribution per unit. Yeah, you can use 2 strong approach and you get the answer correct. There's the selling price here, so can you calculate your variable cost per unit? You are going to calculate variable cost per unit. How do you get a variable cost per unit? How do you get the variable cost per unit? Now sum all the variable costs together. So 54, 72, 18, and 27. Put all of them together and divide it by the 9,000. Whatever answer you get, that's the variable cost per unit. How do you get that? Good. So that is it. So in short, the fixed cost will be the 42 plus the 42,000, or we can be adding it there. 42,000 plus the 36 goes, so that's the fixed cost. 42 plus 36, so 42 plus the 36,000. That'll give us 78,000. Now what do? To get the contribution, you have to pick the selling price and then realize the variable cost. So let's calculate the variable cost per unit. So therefore, variable cost per unit. What's the variable cost per unit? You list all the variable costs in the question, all the variable costs. All of them. All the variable costs. So the variable costs together, let's go and then add them. So 54,000. So if I should scan through, so it will be 54,000 plus 72,000 plus 18, and finally plus 27. Good. Please write it before. Okay, so all divided by the unit, 9. So 9,000. That'll give us the variable cost per unit. So what do you get? You get 19. Therefore, it's equal to 19. So in short, contribution to be 19 Ghana cedis per unit. So therefore, the contribution per unit will be what? Will be selling price of 32 less than 19. That will give us what? 13 cedis, right? So that's the contribution per unit. So therefore, come back and then put it in. So 78 all divided by 13 Ghana cedis. And at length you get 6,000. You do the calculation. So that's the unit, 6,000 units. How do you get that? Good. Now to get a break even, value. You just have to multiply the break-even units by the value, then you are done. So you are going to multiply the break-even units, which is the 6,000, by the selling price. So the next question is the value, break-even value. So get the unit of the 6,000 and then multiply by what? The selling price of the product. Then you are done. Good. Okay, so that is how we are going to calculate it. Sorry. Now, now, hmm. Yeah. So the break-even value is the unit. So after getting the break-even units, then you multiply by the selling price. Now, another way to get this 13 is to go by the total approach. So pick the total contribution and then divide it by the number of units, which is what? 9,000. How do you get the total contribution? That one is the total sales less the total variable cost. Good. Or the profit plus the fixed cost to give us the same answer. Well, that is it. If I choose that alternative, then we'll be getting something like an alternative. It's an alternative. We get the same answer. 39,000 plus 78. That will be the contribution. Then I'll divide it by 9,000 to give me 13 exact. So that will be 78 plus the contribution, total contribution will be total contribution will be the profit of 39,000 plus total fixed cost of what? 78,000. Then what's my calculator? Good. Good. I have it here. Now, so to be 39,123 plus 78,123. That'll give us 117,000. That's the total contribution. So therefore, contribution per unit is equal to this figure divided by 9,000. If I should divide this by 9,000, you still get the same 13. And then you are done. So divided by 13. Divided by 9. 9,000. So the answer is 13. Correct. Another alternative to get a total contribution, you go by the sales. But that one, you add all the variable costs to it. which might be a very long way. So kindly select the shortest way to do this. Okay, so I'm done with that one. Good. Now, we're just finding means of getting the contribution of what? 13 Ghana cedis. There are so many approaches that we can go by. They've given us the selling price, so we can just go ahead and calculate the variable cost per unit, divide it, subtract to get it. Or we can also get the total contribution and then divide it by the number of units. How do you get the total contribution? Total contribution is equal to your profits plus the fixed cost. And our break even, total contribution can also be the fixed cost plus the profit. Or the normal approach, the sales revenue less the variable cost. This will give you the same answer. If like, kindly sum all the variable costs for us. All the variable costs. So to be 54 plus 72, 54 plus 72 plus 18 plus another variable cost again, 27. So the total variable cost will be total variable cost will be 168, right? Perfect. So therefore, the sales revenue is 288 less total variable cost of 168. Please, I'm working in thousands. So 288 less the answer. We are getting 120. Now here. Total variable cost 54 plus 72 plus 18 plus 27. That's 171. Sorry. It's 171. So lessen it. So 288 plus the answer. That's 117. It's back to this. Then you are done. So once you get this one, then you divide it. Then you are done. So now let's move on. To get the value, don't forget to multiply by the sales or the selling price. And they say contribution to sales ratio. That's the contribution ratio. How do you find that one? It's equal to the contribution over the selling price times 100, or total contribution over the selling price times 100. So if you have the selling price already, don't need to worry. So here to be the 13 divided by the 32 times 100, or total contribution of 117. So to be 117 over the total sales of 288,000. These answers are the same. And then you are done with the contribution to sales ratio. Good. So that is it. Now let's go to the C part. The number of units that must be sold to earn a profit of 52,000. A profit of 52,000. So what do? You go through the same process again. Then that you have to add. You have to add the 52,000 to the fixed cost and divide it by the contribution per unit, and then you are done. Good. So that is it. Now, the issue is prepare the budgeted income statement if the company operates at your full capacity. Please, this very question, the C aspect. Check how we did this. Calculate the number of units so to earn an income of 75,000. Over here, check this one. We came again and then we asked the same question. By this time around, we said that calculate the number of units that must be sold to earn and after tax, the tax didn't come in. So to earn after tax profits, so it should be after tax profits. After tax profit of 100,000. If the tax rate is what 40%, please look at how we did this one and this one. Good. So take note. It can be given tax in the question. Okay, so I just want to highlight that not always they will give you the question without tax. So kindly go through the tax issue. I think we did that one when you're solving that question. So good. When you get the break-even video, all of them are in it, so you'll be fine. Okay, so let me go straight to this. Prepare the budgeted income statement if the company operates at full capacity. Now in this question, they say I am done limited has a budgeted profit statement for it next year when it's expected to be operating at what? 75 level of capacity. So when you are operating at 75, your unit is what? 9,000. So at full capacity, which is 100, what will be the unit? So if 75, you are producing 9,000. Then if you are at 100%, what will be the unit? I hope you get that. Or if you don't want trouble, all what you have to do is this. You just have to gross it up because 75 and now you're looking for what? 100. So you have to gross it up. So this is how it will be. I need 100, so divide whatever you need. I have 75%, so times the 9,000. So which is equal to 12,000. So it means that we should prepare income statement or profit statement when the company produced 12,000 units. When the company produced 12,000 units, what is the profit statement? So here, my advice is this: kindly check the question. When you check the question and this one is profit statement, look how they've done it. Profit statement, this is a profit statement, this is an income statement. So when you see something like this, it means that you can also follow the same format, just that you are going to now prepare it at 9,000 units. So the sales will be the 9,000, it no longer be 9,000 units, it will be the 12,000 by 32. You put your answer down. When they move, you move. When they stop, you stop. How we get it? Good. Then let's direct material. They had 54. So what do? You find the per unit. You divide this one by the 9,000, which is 60 this. Then you multiply by the 12. So you'll be doing this, then you are done. I hope you get that. Good. Good. So if I should do that one, here, it it will be, in fact, this one, the full solution is in the break-even video. So kindly go through. If you have not go through that, kindly go through. If you have not go through that one, please try and do so. As I'm scanning through this. So you start your sales. It's a budgeted profit statement at full capacity. Budgeted what? Profit statement. The same as income statement. But just that the question say income, so you have to also state income. Your two currencies. So you start sales revenue. Sales, open your bracket, it will be 12,000. Now they're operating at full capacity, and we've calculated the full capacity there. And then you are done. Okay, the C. The C, that's the target profits. So the C is the formula like this. The unit required in order to earn profit, it will be fixed cost plus the target profit, all divided by the contribution per unit. Good. In this question, you put 52 there, you are done. All this we've worked for them already. However, if they bring the issue of tax in a question, if they bring the issue of tax in a question, that is where you have to now change the formula small to be the target profit on top, into brackets, 1 minus the tax rate. It means that you have converted the profit after tax to what? Profit before tax. Good, so that is it. Why? Because tax is not a controllable item. So take note. Good. You'll be fine. You are going to repeat this in the next question. So you'll be fine. You'll be fine. I'm going to repeat this in the next question. Good. Okay. So now let's continue. Times the selling price of 32. Whatever you get, you put it here. Then when they move, you two you move. When they stop, you two you stop. What is the variable cost? What is the variable cost? Sorry. Good. The variable cost. So you start listing the variable cost down. You start listing the variable cost down. And you are done. You start listing the variable cost down. Now the variable cost, we have the direct material. So direct material, what you do is this. You pick the direct materials, you open your bracket and say 12,000 times, yeah, you pause, you have to get the material cost per unit. How do you get the material cost per unit? You go to the same question again, you pick it up, divide the 54,000 by 9, you get what? 6 cities. So the material cost per unit is what? 6 cities. So therefore, you place the 6 cities here. Then you are done. So that will give us 72,000. So that's the same thing you're going to do. But please, when you go to the first cost, just pick it like that and come and place it here. You are done. No, you are not going to divide it by 12,000. You are not going to divide it by 12,000 because this 54,000, they did not multiply it by 12,000 before getting this. They have already multiplied by activity level of what? 9,000 units. So in the 9,000 units giving us this. Now there was a statement that we made in the, I think, one of the video that says that under break even, the variable cost per unit and the selling price per unit are constant at all levels. What changes is the unit. So when you divide 54 by 9 to give you the price, and then you multiply it by what? By the 12,000 to get a value. Good. Okay. So that is it. Good. So take notes. So you get 72,000. I think I'll continue the next one. The next one is direct wages is 72. So we divide it by 12 to get a per unit. So 72,000 divided by 12. So 72 by 12. Divide by 9. Sorry, divide by 9. It's 8 Ghana cedis. 72 divided by 9,000 units is what? 8. So you come here and come and multiply. So direct what? Wages. So wages will be in bracket 12,000 times what? Times 8. And then that will give us times 12. That's 96,000. Agreed. But if you divide it by 12 and multiply by 12, the answer will still be the same. So if you pick this figure, this 54, and you divide it by the 12,000, are you going to multiply it by 12,000 again? If you multiply by 12,000, you still get 54, which is the same as we copying what? The 75% activity level. So that is it. Good. Okay, the screen is playing. Yeah, it's true. Let me see if I can. It will be 96. Now let's continue the game. Okay. So now we will continue with the variable cost. The next one is the fixed cost. When you get there, just write a fixed cost, but don't multiply, don't divide, just pick the entire figure. Any fixed cost that you see, please pick the full figure. So yes, 42. So that's production overhead fixed. So we call it fixed production overhead. So production overhead, bracket fixed, 42,000. Then the variable will be something like this, variable. Then continue the workings. Open your bracket. The 12,000 times the Ghana city of what you have there. What will be the 27? So 27,000 divided by 9. That's 3 cities, right? The variable, no, it's 18. 18 divided by 9. That will give us 2. So it's 2 cities, right? Good. So it will be 2 cities. So 2 cities. So you multiply by what? 2. So you get what? 24,000. Then you sum it up. Good. Then you shift it here. So that would be 72,000 plus 96 plus 42 plus 24. That will give us 234. So this one will give us 234,000. The selling price will be 12 times 32. That's 384,000 plus 234. So the answer is what? 150,000. In fact, we are following how they prepare their own. We are following how they have prepared their own load. So that is it. So when they stop, you stop. When they move, you move. So here they stop, and if you subtracted it, they had this. They call it gross profit, which you have to do the same thing and in that order. So that's the gross profit. Then it comes to the selling and distribution cost. So that's that means selling and distribution. Admin general overheads. So that one too, there's fixed component and there's variable. So fixed, that one no workings. The fixed session. Let me write the fixed here. So the fixed selling distribution cost is 36,000. So the fixed is 36,000. And the variable is 27. So 36,000. The variable is 27. So the variable. Now you find the price per unit. So now the variable cost per unit now will be 27 by 3 by the 12,000, and that will give us, you open your bracket now, you say 12,000 times the 3 cities. Please, these 3 cities is when you divide. This 3 cities is when you divide the 27. That's the selling and admin cost by 9,000. You get 3 Ghana cities. So you get 36. Then you put it together, you shift it there, you subtract, you get a net profit, and then you are done. So that is it. Okay. Then you get a profit. Please note that there's a difference between when it asks you to calculate the profit or prepare the profit statement. Profit statement, you need to bar the item. Sorry. But the profit statement, you have to prepare the income statement as a whole from sales revenue up to the net profit. But when they ask you just calculate the profits, then you can just go ahead and use the contribution minus the fixed cost. You are done. Good. So that was it. Now let me go to my question of the day, question 3. Yes, question 3. Good. Now try as much as possible to get the question 3 for me. So I'll start with the question 3. It says that Brahabeda Hotels is a company in the hospitality industry that takes care of travelers along its area of operation. The budget for the hotel for 2010 as follows. Now, if you are into hotel, normally you don't sell tangible product to your customers. Good. Now, the hotel, because they don't produce tangible goods, their calculation is a bit dicey. But what can you do? Here it's with occupant charges. That's the total sales revenue. Selling price will be the occupant charge or charge per person. Okay. Now let's see. Please, this what we see here is not a profit statement. It's just a budgeted amount that is stated there and then it's calculated profit out of it. Additional information. Number of rooms available 100 per day. Occupant days. Occupant day 2,500 labors. And occupant per day. Each day, how many people come to probably use the facility, occupy the rooms? Okay. Now you are required to compute the contribution margin. Please, who can find the contribution margin for me? If you look at it, if you can tell me the formula, I'll be fine. Good. Good. Yeah. Okay. Good. So contribution over margin. Okay, I'll take it because margin is what? Margin is sales. Okay, so that is it. Contribution over sales times 100. Okay. So contribution margin. That's it. Now, anytime they give you question like this, can you locate the selling price, locate the units, locate the variable cost, and then you are done. This is total sales revenue, 1,100,000. Good. But who can tell me the sales unit here? They are saying that occupants per day. So each day, the number of people that occupy the room is 24,000 per annum. So for the whole year, it's 24,000. Good. So this is a sales unit. Says that here they are not selling a tangible product. It's intangible. It's a service. Good. So that's 24,000 occupants. So the question is, if the sales unit is 24, and now if we have generated a revenue of 1.1 million, then what is the selling price? Over here, we call it occupant charge per person. Occupant charge or charge per person. How do you get it? Can somebody calculate it for me? If the sales unit is 1.1 million, and then they've sold, so if the sales revenue is 1.1 million, and the sales unit is 24,000, then what is the selling price? That's the occupant charge. So can you divide the 1.1 million by the 24,000? Then what do you get? Good. Please let me have your answer. So 48.83. Good. Perfect. So that's the selling price per unit. When they give you a question like this, can you locate this stuff? It will help you to solve the question. I like that. Have you seen the I am done? That one, the examiner gave you the selling price and then the sales unit. How we get it? Selling price and then the sales unit. So if you multiply the 9,000 by 32, you get 288. But here the examiner have given you this 288, and then they give you the 9,000 the footnotes, but the 32 is not given to you. So that's what we are finding here. Good. Now let's do some small analysis. Let's do some small analysis here. If every day you have rooms available, 100 per day, the whole year, how many rooms will you have? The whole year. Please, let me have your answer. Can we approximate? Here, leave your answer in 2 decimal places. Can you leave your answer in 2 decimal places because currency, unless we are told to run to the nearest whole number. Please, let me pick your answer. Now, it's like this. Every day or each day, you have what? 100 rooms. So the whole year, how many rooms will you have? Not by 12. The whole year, we have 365 days. So if each and every day I have 100 rooms, so in a year, I will have like 36,500 rooms available. 36,500 rooms available. Good, so that's our full capacity. So there was a question in it that says that margin of safety if the hotel operates at full capacity, that's the full capacity. So in this question, this one, they are operating at 75. So if 75 giving us 9, then the 100% to be what? We have 12,000. Here to look at another star of giving you the full capacity. We have 100 rooms available. So times 365, that is it. Now, when the question is given like this, when you start analyzing it like this, write down the question. You can see here the examiner have done something for you. Very good. Variable cost. He has listed all of them. Then you went to the fixed cost and listed all of them for you and sum all the costs up. Then subtracted before arriving at the profit. Good. So that is it. Now let's go straight to the question. Now we've analyzed it. That the sales unit is 24, selling price is 45.83. Now let's go to contribution margin ratio. Contribution margin ratio. Contribution margin ratio. Contribution margin ratio. Good. Contribution margin ratio. Please. Break-even is purely formula work, and then like they're a bit straightforward for you. So if you can get it for me, think I'll be fine. Good. You won't spend much time on this. So we are starting. Now, Good. Good. So that is it. Okay, so let's continue. Sorry, there's some animal here falling French. Please be with me and see how we are going to calculate it, and then you will be fine. Good. Now, I will use two different approaches. Please select one for yourself. I don't know the one that will be okay for you. Will look easy for you. Hey, what's wrong? That is it. Good. Now, question. Was it I? It was in I. So I. You can see from that angle. Can you see from that angle? Good. Is that oh okay? Can see well. So I. That is not coming. So it starts contribution margin ratio. This is also called it's also called contribution to sales ratio. Contribution to sales ratio. Contribution to sales ratio. Yeah. This is worrying on. Good. Contribution to sales ratio. I hope you get that. Some animals are worrying us. Contribution to sales ratio is also called profit volume ratio. Profit volume ratio. So that's it. Now the formula, first approach, method 1. First method. Don't need to do other two. Contribution margin ratio is equal to the contribution per unit. Contribution per unit all divided by the selling price. times 100. Good. This is a question called Prahabeda. Yes. Very not too straightforward because of the industry. So kindly be with us as we are solving it. Good. So now let's see how we can do this. How do you get a contribution per unit from this question? How do you get the selling price to from this question? Okay, the selling price, I think we did that one. Good. So what level is the variable cost, right? So we said that for the selling price, which will be the occupant charge, should be the occupant charge. It should be the sales revenue here divided by the 24,000, the units, sales units. So that's the 45.83. So that's the selling price. So that's what we can find first. Good. So let's go to the board. So therefore, selling price will be equal to, how do you find the selling price? 1,100,000 divided by the 24,000 units. So they had 45.83 Ghana cedis. Now, how do you find the variable cost? Then we are done. So let's find the variable cost per unit. So let's sum all the variable costs up to get the variable cost per unit. So variable cost per unit. Therefore, variable cost per unit. Variable cost per unit. How do you get a variable cost per unit? How do you get a variable cost per unit? Now let's go to the question and see how best we can do this. Variable cost. So we have to sum all up, all the variable costs. So start from here, 80,665 and 92. We have to sum it up and divide it by what? 24,000 to get a variable cost per unit. Good. So that would be 80,600 plus this. So can we sum it up for me? So to be into bracket 80,000 plus the 600,000. Or if you like, you can list them down. You can list it down. Plus the level 2 items, then we are done. Variable costs are 4 here. Good. 837, right? Oh, they've already found it then. I like that too. Wow, I've not even seen it too. Hey, that's good. That's good. They've already found it. Okay, so the total variable cost can only show working because the 837,000 is not in the question. So quickly, just open bracket, you put all of them together, and then you are done. So if I should continue the game, 65 and 92, right? So plus 65,000 plus 92,000, right? Now, if you think it's no good there, best approach is to now list them with their name. So I'm going to list them with their name. You'll be forced to supplies, right? Supplies. That supplies is what? 80,000. Then what do you get again? Direct salaries. That's the wages, 600. Then overheads. No demarcations though, because we are not calculating. What is what? What is 65? Yeah, so 65, 92. So 65. 92. Then we call it admin. You put it together, you have 837,000. So therefore, the variable cost per unit will be, you divide this one by the number of units. The number of units is 24,000. So therefore, you get 34 point, this is what you get, variable cost per unit. Good, answer is there. Let me go and pick it up. 34.88, right? Good. I like that. 34.88. That's the variable cost per unit. Hey, that is not coming though. Sorry. So if 38.4, 34.88, not 38.44. It's 34.88. So now how do you find the contribution? So you subtract the variable cost from the selling price to get the contribution per unit. How we get that? Good. So take note. So I can do that one here. Therefore, the CS ratio will be, contribution is nothing by this selling price less the variable cost over here. Then you get your contribution. So you can equally do it here. Let's do it here. Contribution per unit. Sorry, it might be worrying me here. Contribution per unit will be equal to the selling price of 45 Ghana cedis .83 less what? Less 34.88. And that will give her 10 dot. I like that too. 10.95. Good. So that is it. Okay, now finally, what will be the CS ratio? So CS ratio, therefore, or the contribution margin will be nothing by this 10.95 divided by what? Divided by the 45.83 times 100. How we get that? Good. And then you get 24%. It will be 23 or something, eh? It was 23 or something, 23.91 or 90. And then you are done. So it's equal to 23 dot, is that 91 or 90? 91 or 90? 91 or 90. So 10.95 divided by 45.83. Which is what? Good, 90. So 23.89 is 89, eh? Okay. It's okay, 90 is okay. So that's percent, 90%, and then you are done. Good. So that's the CS ratio. Now look at the long approach that went through because of the variable cost issue. So now get it. This is the first method. Method 2. Method 2. All what you have to do is we need to get the total contribution divided by sales. You are done. Total what? Contribution divided by sales. So we are going to amend the formula small. So method 2B, let me do it here. It's equal to the total contribution all over total sales times 100 to give you the same answer. Okay. Now what's the total contribution? The total contribution will be okay, sorry. Copy now. Yes. Please, we are not dividing it by the 12,000 because 12,000 is not the one that they used to multiply. That one was 9,000 activity level. That 54,000 that we pick is activity level was 9,000. That gives the 54. So to get the price per unit, you have to divide it by 9,000. That will give us 6 cities before we can multiply by what we want. Now the question is this: if we divide it by 12,000, what figure are you going to multiply it by? Tell me. Assuming that you've divided the 54,000 by 12,000 like this, and you are done multiplying to give you per unit, right? Good. And again, you are going to multiply by 12,000 again, which will give you the same answer as 54. So are you trying to tell us that at a full capacity, the cost is 54,000. At the lower capacity, the cost is still 54,000. Meanwhile, it is not a fixed cost, it's a variable cost. So you have to divide it by the actual or by the planned one, then you are done. Good. Okay, now let's go to the top if you are done with the sound. Okay, now method number 2 is the total contribution. So let's go to the question and then let's calculate the total contribution. How do you get the total contribution? Total contribution will be the total sales less all the variable costs. So total sales less all the variable costs. So it will be 80, 665, 92. Good, so that is it. Now I am assuming that we've not done this, so this solution is not there. So that we could have just copied this one, come and then continue from there. No. So it will be like this. You start with your sales revenue, which is 110,123. What do? It's a variable cost. Let's add the variable cost. Now let's start. Supplies is 80,000. What do you get again? Salaries is 600,000. Now lessen it. Then overheads is what? 65. We are lessen it. Then admin is what? 92,000. We are lessen it. What do you get? So this is the contribution, total contribution. From V, 65,000, right? Hey, sorry. Here is 110. Like this, should be like this. Good. It's 1,100 and. Okay. Good, thank you very much. Now, Mr. Dennis, if you do it, if 54 is equal to 9, then what will be 12,000? It will still bring you back to the answer. Agreed. It will still give you back to the answer. So that is it. And in doing that, you divide it by what? By 9 before multiplying. Because if 54, if 9,000 is equal to 54, so 12,000 will be what? Exactly. Good. So someone had 263 for me. 263. Good. I like that. Someone has already calculated it. Wow. Interesting. I like your answer. Good. Okay. 263. Good. So this is the total contribution. Total contribution. 273,000. I like that. 273. 263. 273, 263. Good. Okay, so that's 263. Now this is a total contribution. So therefore, contribution to sales ratio will be, therefore contribution to sales ratio, CS ratio will be the 263 here in totality, all divided by sales 110, 123, all times 100. Whichever answer you do, it should give you the same answer. Good. So that will give us okay, so that is it. Now what do you get? To give you the same answer, right? 23.90%. And that becomes the margin, contribution margin. Good. Please, I hope you seen it. Select one for yourself. So it means that if you go to just ended question, the previous question, you can also use that method. Just ended question. You can also use, yeah, this question. Yes. So what you do is you say 288 less all the variable costs. When you are done, you get the contribution. Then you divide it by the sales of 288. It's also to also give you the same answer. Then you are done. So take notes. Then you are fine. Good. Please, any question for this before I move on? If there's no question, then let me move on. Okay, so let's go to the next requirement. Now let's go to the next requirement. The next requirement says break-even point, both occupant days and occupant charges. Occupant days means units. Occupant charges means sales value or revenue, because the total charges that they will earn for the whole year. Yes. So that is it. Now, how do we calculate break-even point? Both value and then the unit. Good. Please, how do you get it? Good. Okay, so please, what do you get? Hey, double. Fixed cost over contribution, good. So let's go and calculate the fixed cost from the question. I like the fixed cost over what contribution, right? Yes, fixed cost over contribution per unit. I like that. So let's go to the question. Can you select the fixed cost? So what will be the fixed cost? Fixed costs are here, overhead and admin. So addition of these two, that's 265. Agreed. Perfect. So this is the fixed cost. You sum the fixed cost up. So that's the 265. I like that. So that's the fixed cost. So therefore, the break-even units. So let's go and do that. Now, I hope we have the contribution per unit. We have the solution down because our request for it. What is the contribution per unit? The contribution per unit. That one is here. Contribution per unit is, let me put it down. Good, this 10.595. Good, that's the contribution per unit, right? I like that. You divide this one by the 265, you are done. So let's kickstart the game. So that's the second aspect. So each of the steps, then you try alternative. Good. Okay, so therefore I think I have to start from the which top. So I contribution, break even, point. When you mention point, we have the unit, but here the unit is called occupant days. Occupant days. Into bracket, that's the unit, break even unit. Agreed. It is occupant days. I like that. Wow. Well, finished calculating it to 24,200. We're getting 24,200. Good. Which is equal to fixed cost over contribution per unit. So the fixed cost is equal to 265. But please, that 265 is not in the question. So show working how you got the 265. Now show working here. It was 125,000 plus 145,000. All divided by 10.95. Please, the answer is 24,201, right? Good. 24,201 days. We call it occupant. 24,201 occupant days. 24,201 occupant days. Number of people that will come. Good. Number of people that will come and then lodge in the hotel. Good, in the hotel. So to be 24,201 occupant days. Good. Good. Okay. Now let's continue. So we had 24,201. So 24,201 occupant days. Occupant days. Good. Now let's go to the value, break-even value, which is equal to here they call it charges. In terms of charges, into bracket value, sales value. That one is equal to the break-even unit times the selling price or the charge per person. Agreed. Charge per person. So what's the break-even unit here? The break-even unit is 24201 dot what? No dot times 45.83 Ghana cedis. So that will give us city of what? 11. Okay. Mm, 1011. I like that. 1011. Is the one who had seen some on here. 1109.127. Wow, .85. I can see 131. This figure is many. It's 31. I can see 127. It's because of the running. It's because the one with the other one didn't run this figure. You made it 00.92. Okay. I like that. So 1109.131.83. Okay. I think I'll take that. Good. I like that. So 1109 131.83. So that's the break-even value. Please, there's an alternative formula to the break-even value. Alternative, method 1. Alternatively, that's the method 2. Break-even sales value is equal to the fixed cost all divided by the CS ratio. The CS ratio. Agreed. So what's the fixed cost here? 265. Yeah, then if you come and then write 125 plus this, I don't mind because you can't do workings 2 times for us. This is the workings on top of it. So what you can just write a 265 divided by what? 0.239. Yes, 239. Answer. Then you write the answer in value. It will be the same as this, but just that here there will be some approximational differences. There will be some approximational differences. So do the same. Let's check again if it's the same. So 265, 123 divided by 0.239. So I had 110,878. So around 70 there. So that is it. Good. If you want to get the same answer, then you don't need to run the CS ratio. You don't run it to get the same answer. And that is it. So we are done with the break-even sales value. So that is it. Alternatively. Okay, so please help everybody get it. Can I move on? Please, can I move on? Okay, kindly check if the answer is correct. Good. So that is it. Good, 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 good. Okay, so now let's move on. The answer will be the same. So alternative. Now let's go to the next question. The next question says that calculate the margin of safety in ratio, margin of safety ratio if the hotel operates at full capacity, and kindly prepare the income statement at that level of activity. Good. So margin of safety. So now let's go to the board. Margin of safety. Margin of safety. Now let's go to the board. Please, if you want to get a full version of break-even into detail, kindly go to the YouTube there. You can get a full version of break-even analysis. Just that this one is just to answer this particular question. So that is it. Okay. So margin of safety. Now this is something that you should probably know. If here is units and here is profit, when you produce, let's say here is 1,000 units, the profit is 0. Anytime you produce less than the 1,000 Ghana, you will get a loss. If you produce here, you get loss. But if you produce here, you get a positive profit. That's good news. Good. Now, assuming that you are a sales manager or a production manager, tell me, are you going to produce 1,000 units, or you produce less, or you produce more? If more, tell me the amount that you produce. Let me see something. So that is, assume that you are preparing a budget for your organization, and you know for sure that if you produce 1,000 Ghana cedis, you will get 0 profits. So what do? Will you produce less or you produce more? Kindly let me know. If you produce less, you get loss. So you have to produce what? More, eh? Okay, you have to produce more. You have to produce more. Good. So let's assume that you budgeted to produce 8,800. How many units have you added in addition to the break-even? How many units have you added? Good. How many units have you added? So it means that you are afraid. You did not budget for 1,000 because you know that if you budget for 1,000, you are not getting any profit. And if there was inefficiencies and care is not taken, you won't get 1,000. Then you get like 900, which will land you in what? The loss area. So nothing that way, that's not a good budget. So at least put some safety, put some insurance in it, so that some cushion, so that even if we're not able to produce 1,800, at least you land somewhere here which will not fall into trouble. So that is it. And now, so since that we have added what? 800. So we call it margin of safety. So the safety that you have added it is what? The 800 units. That's the safety. So can somebody tell me how I should calculate the margin of safety? The formula for finding margin of safety? I like the answer. So can tell me how do you get the 800 here? This 800, the safety. How do you get it? So how do you get the safety? Good. This is how do you get it? Okay. Let's move on. Oh, wow. Good. So budgeted less the actual production. No, I disagree. Budgeted less actual. This is the break even. When you produce this, you are going to break even. Agreed. Good. So it will be budget. This is the budgeted. Less what? The break even. How we get it? Good. So margin of safety, good. Actual less break even value. Okay, so this one we budgeted for 1,008. So it means that it's equal to budgeted less what the break even. This 1,000 is break even. Good. So to be budgeted less what the break even value. Good. So that is it. So that is the margin of safety. So anytime they ask you margin of safety, it is that the cushion that you are adding. So it's the budget. This is the budget. This is the break even. Less the break even. Good. So that is it. Now let's write the formula down. Good. Now margin of safety. Please, we have it in units. So here to be occupant charges. We have it in value. Good. We have it in value. That's the occupant charges. Occupant what? Charges. And then we have it as a percentage. As what? As a percentage. It's also called ratio. Good. So we have margin of safety in 3 forms. You can calculate this in 3 forms. Good. So that is it. So I'll start with the very first one first, and then we move in that order. Then we are done. Good. So the idea is that margin of safety simple means the budget less what the break even, the allowance that you top it up. You know that if you run, let's say, 80 kilometers per hour or per second, good, or per hour. When you run that, you are going to probably pass that vehicle ahead of you, but you run more than that. You've added safety to it, right? Good. Now let's move on. So in units, it will be equal to the budgeted units less the break-even unit. Good. So it will be budgeted occupant days less the break-even units, and then you are done. Now let's go to the question and go and pick what? The budgeted unit. Yeah, we know the break-even unit coming from the previous question. And then the budgeted unit, here there are two items. Let me list them on the board for you. Now we have 24,000 units in the question. That 24,000 units, that's the current capacity. Current what? Capacity. Or if like the other question, if you like Agrobesono, a propon, and then the I am done, it will be the 9,000. It's 24,000. And then we have 36,500. That one is what? Full capacity. Full what? Capacity. Good. So that is it. Good one. Okay. So now, according to the question, are we using the full capacity or the break-even? Sorry, or the current capacity? They should tell us which of the margin of safety. So they say what? Margin of safety ratio if the occupant hotels operate at what? Full capacity. So here it's at full capacity. Good. So that is it. So it means that we are going to use this one. All of these are budget too. All of these are budgets. In this budget is the current budget. This one is our full capacity budget. Have you seen? Good. So you are going to use the 36,000 as the budget. Okay. If you use this 24,000, you get a negative answer. Anytime margin of safety is negative, you know that you have a what? Negative profit. That's a loss. So budgeted will be what? 36,500 units or occupants. Less break-even units of what? Please, what's the break-even unit? We have 24,201. So please, what's the answer? And then that is the margin of what? Safety in occupant days. How we get that? Margin of safety in occupant days. Let me have the answer. 12.229. Oh, sorry, 12,229. So 12299. Good. Then you write occupant days or units. That's the units. Agreed. Good. So that is it. Now we also have it in value. That's occupant charges. Anytime you have units and you are looking for value, what do? You multiply it by what? The selling price. So therefore, the margin of safety in unit is nothing by, the margin of safety in value is nothing by what? The units times what? The selling price. Yeah, the selling price is occupant charge, which is what? 45.83. So therefore, you get something like equal to
If I don't decode the formula, it will be 129,299 times 45.83. That's equal to, good, so that is it. That's the value. Another alternative, which is for this one, will be the budgeted sales value less break-even sales value. Value versus value. That's the alternative. I like that. 563. So 563, comma 663.17. 663.17. So that's the margin of safety in terms of what? Value at full capacity. If you use the current capacity, you get negative. Why? Because the break-even is more than the budget. So therefore, to give a negative answer, that suggests that it's a loss. And true, at that period, it had a loss. When they produce 24,000 units, they'll get a loss. Yes, they have a loss. Let's go and confirm it from the question. So 24,000, there's a loss of 2,000. Good. So if they ask you to calculate the margin of safety here, you get a negative answer. Write it for the examiner. It's negative. That suggests that they are getting what? Loss. Good. So that is it. Now let's go to the percentage. Let's go to the percentage. As a percentage, then we are done. As a percentage, originally the formula is like this, but we are going to recycle it. It's the budgeted unit plus the break-even unit, all divided by the budgeted unit. Meanwhile, the top one alone is the same as what? Margin of safety in unit, right? The top one alone is the same as margin of safety in unit, because budgeted sales unit yes, we are saying that anytime you calculate margin of safety and you get a loss, anytime you're calculating margin of safety and you get a loss, it indicates, you get a negative figure. It indicates that there's a what? Loss. That budget, it will not give a profit or to give a negative profit. For instance here, if you are going to use the 24,000 as the budget, if you just 24, become 24,000 less the break-even unit of 24,201. That will give us negative 201 units. Good. And when you get negative in margin of safety, it suggests that in that period you are going to get a loss. And this figure confirms it. Good. So if you check the company statement, they had a loss too. Good. So that is it. Now let's move on. How we had the budgeted unit. Please, the budgeted unit, they said that they have what? Operating, they have number of rooms. Each day they have 100 rooms available. So for a year, how many rooms do you get? Time 365 days. That's why we had a 36,500. Good. That's perfect. Now let's move on. I've not reached my interested area. Okay, now we are going to percentage. So it means that I can just claim the top one and call it what? Margin of safety over the budgeted units. So it's equal to margin of what? Safety over the budgeted unit, which is equal to the margin of safety of what? 12,220, no, 12,299, all divided by the budget, which is 36,500 times 100 ratio percentage times what? 100. 33.7%, that's the safety. So the safety that you have keyed in is what? 33 dot this, and then you are done. Good. Okay, so that is the margin of safety. Please, in this question, the examiner did not ask us to do all this 1, 2, 3. No, I just want you to know that yes, they exist. So all what the examiner was requesting for is the safety. This session, then you are done. Okay, now let's go to the question and then continue the remaining section. Are we done? No. It says after the safety, say, and prepare the income statement. Please, they say what? Income statement. Didn't say and calculate the profits at that level. If it is income statement, you have to prepare a profit statement. Profit statement and income statement are the same. They are the same. Good. So can you know that? Now, have you seen this question? This one is a profit statement. This one is an income statement. Look at the arrangement. There's a gross profit here. They are using the absorption costing approach. So there's a gross profit, selling and distribution cost. That's operating cost. The fixed section and variable section. Summing it up, now this operating cost, they get profit of 39. So this is an income statement. In which the examiner call it what? Has a budgeted what? Profit statement. So budgeted profit, the line and the line is what? Profit statement. Good. I check here. They just said budget for the hotel for 2010. This is not profit statement, because for profit statement, you don't add all the costs and subtract it from your revenue. No, there's demarcation. Some of the costs are variable, some of the costs are fixed. Some of the costs are linked to production. Some of the costs are also linked to sales and administration. So all this one must be taken into consideration. How we get that? Good. Now the trick is that if the examiner asks you to prepare profit statement or the income statement, and he has already prepared some for you, just copy his own. Copy his format, like here. Look at this question. So prepare the budgeted D part. Prepare the budgeted income statement if the company operates at full capacity. So what I'll do is that get the full capacity in which is the 12,000 and start copies a format like this. This format, the same format, copy it for him. Now here, this is not the format we are going to use. If you use this format, no, this is not income statement. I hope you get it. Or the profit statement. At least show the arrangement. So what to do, this is just a budget that they've put it there. So what to do is this. We are now going to prepare at full capacity. Full capacity means you have to use what? 36,000 units, not the 24. This statement is for 24,000 units, not 36. So you're going to prepare it as we did for the first question. Now we saw. So now be with me and then let's start the preparation. Good. So let me dash the ball. Let's start from the top there. So okay. So we will start. They say income statement. Please, management accounting. This is a management accounting technique, and it follow the management accounting policy, not the financial reporting. So we start income statement. Let me write here. Let me write. Okay, you can see. Good. So income statement at full capacity. You start. So here sales revenue. Ghana city. Let's bring one here. Let's bring 1, 2 here. So sales. Open your bracket. It will be 36,500 times the selling price of what? 45 Ghana cedis. Good. Please, what do you get? So if there's no format, the examiner have not given you any format, kindly follow this format that we are going to do. Then you're fine. This was the sales value. So the sales value will be, okay, let's move on. It will be 36,500 times 45.83. And that'll give me 116,72795. Good. Have it there. Then you go to the variable cost. So let's list the variable costs. Variable costs. So as they've listed it there, the variable cost. So next one, what is this? Variable cost, direct supply. So let's go and pick direct supply. So direct supply is what? 80,000. Now let's get the direct supply cost per person. What's the direct supply cost per unit? So this is the materials. So material cost per unit will be what? So as usual, you have to divide all these items, the variable ones that you see, by what? Divide them by 24,000, because all these costs is at 24 when they produce 24,000, or when they serve 24,000 people. So when you divide 80,000 by 24, whatever you get, you multiply it by the 36,500. Please, what do you get? So variable cost, supply, so it will be direct supply. Open your bracket. I wanted to write it here. The space is not there. Got my answer here. Please, what do you get? Okay, let me do something here. So I want to write it somewhere here and put this one here. So 167,2795. 1, 2, 3, 3. So that's the sales revenue. Okay. Now for the direct supplies, to be 36,500 times what? Ghana city of, please, what's the cost per unit? This is what you get for the cost per unit. This is what you get for the cost per unit. It's 1672795. Okay, please, what do you get for the sales? What do you get for the sales? So here to be 3.33. Or you can also make it 3.80 over 24. If you want to get a full answer, it will be 80 divided by 24. Are we saying? Good. And 80 over 24 will be 10 out of 3. So 10 out of 3. Good. 10 out of 3. So that is it. So please, when you get any of these is correct, this one you give it a full amount, full one. How we get it? To give it a full amount. So times 36,500, that'll give us 121,667. It means that we use the 3.33, right? Good. If you use that one, this is what you get. Okay, I think I'll go by this answer. So that is it. So 121,545. Now let's go to the next cost on the list. I mentioned how you are doing it. Please take note of this. Definitely, you are going to prepare income statement. When I ask you break even. Please, the 3.33 is the cost per unit. Direct supply per unit. How do you get it? We divide the figure here, the 80 by what? 24,000 units. We are looking for per unit. That's it. We have to divide each of the cost. That's the 80,000 by what? 24,000 units. Is equal to 3.3. Then you go to the other one. It will be 600,000 divided by what? 24,000, which is equal to 5 cents or 25. Good, something like that. So you do for all of them, okay? Do for all of them, then you are done. To get a per unit, before you come and multiply it by what you want, I want times 36,000. Now times what? 36,000. That's what we are doing. Okay, good. So the next one will be please, if you use 80 out of 24, it will give you 121,667. But here we have run it because of the approximation. That's looking at 545. Good. So take note. So that is it. Now the wages or the salaries. Yes, but any of them is correct. Any of them, you are right. That's decimals, approximation. Any of them, you are correct. But the one that, okay. So wages, that's your salaries. To be 36,500 times Ghana city of 25. We are getting 91,500. Good. The next item on the list is what? We are doing for all the variable costs. All the variable costs. All the variable costs. So the next one is 65. 65 and 92. So 65 and 92. So overhead is 65. So it will be 36,500 times, and maybe 65 out of 24. I want to be, if it's going to give me decimals, then I'll not do it too, because you've rounded this, you have to also run it. So 65 divided by 24, please what you get? 2.71. So 2.71 times 36. So 2.71 times 36,500. So 98915. Then admin will be 36,500 times what? Admin will be, what's the per unit cost for admin? Let's go and see admin. Admin here is 92,000. Good. So 3.83. So 3.83. So 3.83 times 36,500. That'll give us 139,795. Let's sum all the variable costs. Let's sum all the variable costs. Please, if you go and the examiner have not provided any format and they still ask you to prepare income statement, all what you have to do is go by this approach. Sales so much. List all the variable costs somewhere, and line it, subtract it and get what? Your contribution. Then your fixed cost will continue. Then you get your what? Your profit. Good. That's all. So this is the approach that we want. Everything. If you go and then they've not given you the format, like this question, they've not given us the format, you're going to use this approach. So take note. Okay, so please, what's the total? Summing all this up. So we push it there. 121,545,91 and then those stuff. Okay. 451,505. Agreed. I disagree. Because even this one, guys, 912, yes, 912, 500. 912, 500 plus 121. So 1272. So it's 1272. What do you do? 1272. 1272. 1272. 755. 755. Take it off. What is the contribution? What is the contribution? Contribution. So contribution. So contribution will be. So contribution will be. Low. Wow. Okay. So 167 400,040. Good. 400,040. So 400,040. Agreed. 400,040. So it's a fixed cost less the fixed cost. In break-even or marginal cost approach, fixed cost, if you subtract from the contribution, give you the profit. So fixed costs are two. What are they? Overheads and admins. So overhead is what? Overhead is, let's go to the question. But let's go to the question. Why is the thing making the handwriting bigger? Now here it's small. Okay. 125 and then 140. So overhead is 125. So overheads 125, and then what again? So what do you get? So you get 265,000. So 265,000. You take it off, and then you get a profit of. So this is a net profit. Net profit. What's the net profit? The net profit for that'll be 135,040. 135,040. Please, they ask for profit statement. They did not ask for profit. So if you go and calculate this, in fact, to calculate this profit is so easy. When you produce 36,000, you can just use one single work or just one formula to get the profit. But that's not the issue. Now the issue is how you get it, the workings, the format, the statement. That's why ask profit statement or income statement. If they don't ask you what is the profit, if the company produce 36,000, or what's the profit at full capacity, profit at what? Full capacity. For that one, what you do is this. Just go straight forward. Get the total contribution. You know the contribution per unit to be 10.59. You multiply it by the units, get the total contribution. Then what do? Then you less. Then you had. You get the total contribution. Then you less the fixed cost of 265 from it. You get the profit straight up. Now you start from here. In that case, you will start your calculation from here because you can calculate this. This figure is nothing by into bracket 36,500 times the 10.95. It will give you this. Yes, it will give you that. Please welcome to your question. So 36,500 times 10.95. Go, what's it? 3,99675. Approximately 400,000. Good. That's a running figure. So that's 265,000. So we had 134,675 instantly. We are done. Exactly. Okay, so take notes. Now let me come to your question. If you get the 36,500 wrong, then in fact, which figure can we get is correct here? The only figure that you get is correct is the base cost. This is the only section that you get is correct. If your 36,500 is wrong, everything is wrong. Whatever I've done from complete campaign, they're wrong. So that is it. Okay. I think we are done with this question. So I'll quickly move on. I will quickly move on. So the next question is what? The next question says, calculate the profit statement if the occupant charges increase by 10%. How do you solve this question? This one you do it too. This one you do it. Profit statement. So that I'm going to prepare new P&L if the occupant charges. Occupant charges means the sales revenue. Which of the sales revenue? Is it the one that we just calculated or the original sales revenue? In fact, it's on the original sales revenue. So that is it. So you go there, increase this figure by what? 10%. So you multiply by 1.1. Whatever answer you get, that is it. And then all the other items remain the same. All this one, I'm going to copy the same 80,000 because they didn't tell you to what? They did not tell you to increase the variable cost here. They are just increasing what? The sales revenue through selling price. So take note. So definitely go and meet a massage, like adjustment in the unit. Oh, what if the unit increased by this or the selling price reduced by this? What will be the profit? Let's appreciate that question very much. So a gentle reminder of question 1D, something like this. Prepare budgeted income statement if the selling price and the material cost per unit increase by 12%, whilst the planned sales unit, so the budgeted sales unit increased by what? Increased by 6%. Something like this is very good. So all what you have to do is, after solving this, you just copy this one. Let me copy it somewhere here, copy. Then you come here, you set another question again. I'll paste it here. Good. Done. It's another question on its own. It's another question on its own. Good. So that will be VII. Good. So VII. Perfect. So that is it. Prepare budgeted income to the selling price. Material cost per unit increased by. Hey, there's no second. Alright, let me copy on. So that is it. So that is it. Good, so that is it. You can just copy it and bring it. Okay, cost per unit. Okay, so that is it. And you are done. Cool, so you get a full question now. Perfect. So you get a nice one here. Preparing budget income statement if the selling price and material cost increase. Yes, so I've added it. Let me save it. Good, so that is it. So here they say occupant charges. If what? The occupant charges. They didn't say occupant days. Occupant days becomes what? The units. Occupant charges is what? The sales revenue. Occupant charges is here. Occupant charges. Good. So occupant charges. So that is it. So what do you do? Let's go to the board and then you'll be fine. They're almost done. Oh, I've finished. So all what you have to do is You multiply you write sales revenue here, which will be 1.1 times 1100,123. That gives us 1210,123. All the variable costs that you see here, you are going to pick the original question. You are going to pick it from the original question. Oh, sorry. You're going to pick it from your original question. So you have to increase it by 10%. That would be 1.1 times this to give you 1210. And you are done. Okay, so that is it. So here, when you do this, you have to just go and copy the original items because they have not changed the sales unit. It's still at the original 24. So you copy 80,000, you copy 600, you copy 65, you copy 92, and then you get your contribution. Then you relax for a while. Then you come back again. Then you copy this fixed cost, you copy this, then you get your total fixed cost, then you finish it. Then you come home. Good. I will get good. So that is it. However, let's go to the requirements. However, if I should change this one, make it prepare the profit statement if the occupant days. If I make it occupant days to change the solution. Are you seeing? If I make it occupant days, meaning if the unit increase by 10%, which of the units? The original unit, which is what? The 24,000, increase it by 10%. 10% of 24,000 is what? 2,500. Then you add back, that will be 26,500. So in that case, this is how the solution would be like. In that case, all what you have to do is do your small working somewhere and tell the examiner that now 24,000 units times what? 10%. That will give us 2,400. Then you add it back to what? The original figure. Original sales is what? Still 24,000. So we are getting 26,200. 26,400. Good. Or you can also do it this way. So it means that the new unit is what? 26,400. So you're going to prepare a new statement using what? 26,500. Everything based on 26,000. So when you start like this. Sales unit 26,400 times selling price of what? 45.83. This one will still be the old selling price. If our selling price, if no change it here. So unless that will change. Good. Then you put the answer there. Anywhere you see 36,500, just put 26,400 there. You multiply the same figure. Put the answer there. For the variable section, please. Here the examiner is saying trying to test your knowledge on movement between what? The variable question. Yeah. Exactly. Yes, exactly. So that is it. I'll be getting so you divide this one. When you get a 26,400, you'll be multiplying it by the cost per unit that you had here. So you're going to just change this figure to 26,400 and everything the same. Yes, and then you are done. I'll be getting it. So that's how it will be. So have you seen the massage that we are doing here? Have you seen the massage? So if here is this, occupant days, that's how the solution look like. But it's occupant what? Occupant charges. So we'll come back to occupant charges. So that one will be a bit okay. So that is it. Okay, so that is it. Then you are done. Okay, the next question says that the break-even, prepare the break-even point in occupant what days if the direct salaries were to increase to 626,000 Ghana cedis. What are the direct salaries? It's 600,000. So now they are going to increase it to what? 626. So what would be the break-even unit when the salary increases to 626? So how do you do it? Still, does not change the principle for break-even. Break-even unit here, they are looking for occupant days is equal to fixed cost divided by what? The contribution per unit. And here they have increased what? The variable cost, a component of the variable cost, which is what? The salary, 2626. So just that one will increase. So yeah, I'll go to several alternatives and then you select one for yourself. Good. Okay, so that is it. Now let's go to the board. I'll do this one several alternatives. Kindly select one, okay? So let me dash the board. And then you are done. This video now. What's the? Is it IV or VII? I think it's this. But the question two, there's no note to. It's V. Okay, the question two, no note is V. Good. V. So V. So the break-even points, break-even into bracket occupant days is nothing but the fixed cost of our contribution per unit. Yeah, the fixed cost, they've not changed it. All what they've changed is what? They have increased one of the variable. So I'll solve this question three different methods. Please kindly choose one. You don't need to do all. You don't need to even to know all. You have to know maximum of two. Let me see if I can do the fourth one here. First, it means I have to go through the process again. So here you have to find your what? Your variable cost. So you list all the variable costs, and then you list the variable cost, you just want to add the what's the name? Add the 26,000 to it. So that is it. So it means that the new variable cost will be new variable cost, and then the new what? Sales. So step one, or the first method, I'll do the new variable cost like this. So new variable cost. New variable cost, which will be, you start the game. You start listing all the variable costs. Just that when you get to the salaries, instead of you picking the 600, just make it what 626 like this. Just that there's another shortcut for it. So what's the old variable cost? Just add the increment. If in the old variable cost it was 600, new one it must be 626. The increment is 26,000. Agreed. It has increased by 26. If you understand this, you are done. If it has increased by 26, then why can't we go and pick the old variable cost, which is 837? Please don't ask where we got this figure from, because we are bringing it from where? The previous answers. Old variable cost that we have. Good. Thank you. Plus the increment. So increase. So increase in what? In the salaries, which is what? 26,000. So therefore, the new variable cost will be, what will be the new variable cost? I like the answer. Perfect. The new variable cost will be what? Total answer. 863,000. Agreed. So therefore, the new variable cost per unit will be, we divide this one by the original 24,000. Divide this one by what? The original. New variable cost per unit will be, you can continue by saying number of units is still 24,000. So therefore, variable cost per unit will be 35.96. Perfect. Now, when you get this 35.96, what do? You now, Fred, the increase is 626. Yes, it has increased to 626. It was from 600 to 626,000. So it has increased by, sorry, that part is not coming. So it was from this to this. So it has increased by, good, I like that. So the difference, good, perfect. So therefore, what will be the new contribution? So ideally, if you bring the selling price here, which is 45.83, therefore the new contribution per unit to be what? Selling price less the variable cost of. That bit is not coming. So new contribution will be, I like that, I guess it will be 9.88. It's not 9.88. So 9.87 and not 88. So 863 divided by 24. Okay, so that is it. What is the 24? The 24,000 is the unit. We are converting the total variable cost to variable cost per unit. So what's the demand? The current capacity, 24,000 occupant days. Good, so that's it. So that will be 9.87. Good. So therefore, when you come, the first cost will be still 265,000. Contribution now is on 9.87. Now method 2. Method 2. Method 2. Now method 2. Method 2 will be this, that we find new contribution and divide it by the number of units. What's the old contribution? The old contribution. Then you Find the new contribution. You are done. For method 2, how to get this figure? You know that what is the old variable cost per unit? The old variable cost per unit. Sorry, that side is not coming. Sorry. So sorry. So method 2, what is the old variable cost per unit? It was 34 or something, right? There's the old variable cost per unit. Old variable cost per unit was 34 dot something. So 34.88, I like that. What do we do? Then the new one, increment. It has increased by what? So it said examiner that it has increased by 26,000 divided by 24,000. It will give you 1.08. Add it. New variable cost per unit. That will be, it will give us 35.96. Wow. So you can also use this approach to just get the new variable cost. And then you go and then you divide it, subtract it from the sales to get the contribution. How we get it? Now I'll give you only last one. That one's very short than this one. It's very short than this one. Very short, though. So the last one that I'll do, which is the third one, is like this. Let me do it here. The third one is like this. What is the old contribution per unit? What is the old contribution per unit? What is the old contribution per unit? 10.95 m. How we get it? 10.95 m. Old contribution per unit. Please, the old contribution per unit. Old contribution per unit, which is equal to 10.95. Agreed. Perfect. Now, when variable cost increases, what happens to contribution? It will come down. Now, variable cost has increased by 1.08. So you less it, less the increment in variable cost, or less the increase in variable cost. So less increase in what? Variable cost. This is 1.08. Taking this from this, what do you get? And then that's the new contribution. So new contribution. This is the shortest approach. And this will give you this answer straightforward without worrying yourself. So what is the answer? Then we are done. So the answer will be 10.95 plus 1.08. And that will give us 9.87. Perfect. So 9.87. 9.87. Great job. Great job. So let the camera go down. Good. So the old contribution. Now, so these are three approaches that you can use to get the new contribution. Or you can also go by the old approach by adding all of them. So what's the break even? You divide and get the answer in units. You are done. And let's move on to the next question. Don't forget to put your answer down. Yes, your answer down. Okay. Now saying that prepare the break-even point in occupant days if the fixed occupant service overhead were increased by 145. So the same break-even point if what? The fixed occupant service overhead. The fixed one, so the fixed cost increased to 145. So let's go to the question. Top. Why are you? Good. So if the fixed overhead, this 125, now it is 145, what is the break-even point? Have you seen these changes? So what do? You just have to add 145 plus 140, making 285. So they are just telling you that if the new fixed cost, the total fixed cost increased to 285, what is the break-even unit? How do you get it? So that is it. That's a break-even unit. So good. So that one, all what I do is, please can I dash the board? If you are copying, just let me know so that I'll allow it for you. If I'm not copying to, let me know. Oh, okay. Sorry, sorry. So what you do is this. You divide the new fixed cost. That will be 145 plus the 140, giving us this. Then you divide it by the old contribution, not the new one. So get 26,000. Someone give me the answer. Okay, so the answer was here 26,027.4. Then that's the end. Please, in your spare time, try and see. I've added one bit to it just right now. We share the question together. For that note, I like that note that said that I don't believe that this note. I like the massage. Good. So, and especially this one where I wrote the occupant days. I like that massage too. Occupant days. Good. This one something like this. I like this one too. So I wish I can create another one again and put it inside. So that is the end of the game. Okay, so there's a question here. Welcome to ratios. Ratio will be your question. That's the question 4 on the list is ratios. Question 4 is ratios. Question 4 is on ratios. Good, so let's see how we can. Now let's look at the ratio questions and see. Just that your ratio question will be a new trend, which is the common science analysis. So we should know everything about it. Good, so here is the question. So the question is on Akwasi Papa. So questions on interpretation financial statement. Please and please again. Locate 2018 October question. If you don't have it, just send me hi. I'll forward it to you. If you don't have that question, send me hi. I'll forward it to you right now or after the class. Then when you get that question, just delete. Okay, October 20. Okay, good. I'll forward it to you. I've seen your hi. Yes, I'll forward it to you. Now, okay. So I'll forward it to you. Good. Now, when you see that one, when you get that question, just delete. just delete the requirement. Just look for the ratio question in that set, and then delete the requirement over there and put this requirement there and solve it. You are done. Then you are, can say, fully, because this question is on trend, common size trend, like different years, but the same company. But that question is about different company. So if you go there and if about different company, you have the fair idea. If you go there, it's about the same company, different years, you have also have a fair idea so that the question will not be too new for you. So that is it. Now let's see. The first question says that, let me see if I can prepare. Say, Akwasi Papa. Question Akwasi Papa. Okay. Akwasi Papa. Akwasi Papa. Let me check. Akwasi Papa. Okay, so all those who have sent hi. Okay, so you have it now. Everybody have it now. Okay, so have it now. Good. Now let's go back to the question. Any question for me here? Okay. That is on WhatsApp. I can forward it to everybody. So that is it. Let me see if I can even project that question, so that when you get it, you go through it and then see. I'll project that question to you. Now, if you change the requirements, now you are changing just the requirement. Okay. The requirement was, so that question is here now. Good. So let me project that question here for you. Good. So that question is here. So this is the question. October 2018. Question. What do you see here? Question. There's a question. There's a question here. There's a question here. Good. Zamina, Mali, and Zamisi. That's the question I'm talking about. Good. I've seen it here. So I've seen this question nicely like that. So all what you have to do is this. Just change this requirement. This one was very straightforward. 20 marks. So just change this requirement that you see here. Oh, I can't even copy. You change it to this. Good. Now you change it to this requirement. And then you are free to go. And someone said the Zoom is not connecting. So that is it. Someone said the Zoom is not connecting. The thing was coming. Okay. Okay, so that is it. Now let's continue the game. So I will solve this one, and then I just look at it. Just look at it. You are just looking at it. The question is very nice. I like the question, so that's why just look at it. No, to just complete it, because what we are doing what trend. We are doing the same company. Good. So it can also happen that you can also make the question different company. Good. But common size, because of the common size is very good when it comes to the same company, but it's over time. Yeah. The analysis is very great, and then we are done. Okay. So here will be fast. We will be fast. If I can try, I'll try and see if I can use Excel to do the calculation for you to see. Try and see if I can use the Excel to do the calculation for you to see to save time. If not, we use our board now. Okay. On. One of you not see too. Let's use our board. We don't want trouble tonight. Now let's read the question. The question states that Akwesi Papa Limited is a private company in Ghana with a CEO of what Akwesi Papa and the majority or shareholder, and recently joined the board to analyze the performance of the company. Extracts from its most recent financial statements are provided below. So you get Akwesi Papa. So they are there. Please, if you have the other version of the book, there were some few errors which have been corrected. If you have the other version, so kindly note that, make some small corrections. This figure that you see, it was 12,600. So check yours if yours is not 12,600. This figure was 16,000 something like that. But this is the right figure. And this figure too was not correct. And this figure too was negative. When you go to the financial position, there was a place. This figure too was 5,000, but this is the correct figure. Here too, this is the correct figure in that order. So check if the changes you own have the corrected figures, then you are fine. Good. Kindly note that. Okay. The hard copy will be communicated when it is ready. When the solutions are ready, I've just arranged the solution. I'm not ready. Please read. Okay, so go to the P&L. The changes. Where is the invoice? Okay, to yeah, just that it's new trend though, but you have to. If not, you can answer the IFRS and then the budgets. I like the IFRS and the budget. If you answer the IFRS, it's very good for you. Now I say write a report to the board of what Akwesi Papa, analyzing the financial position of the company using any two key ratios. Please, you say what? Any two key ratios, 10 marks. So here you may be restricted to certain two key ratios. So now let's go to the board and be part using common size vertical analysis. Write a memo to evaluate the performance of the company. Good. So now let's go to the board. So that is it. Yeah. Great. Now we said that ratio. There are 5 types of ratio. What are they? 5 types. 5 key ratio. The key. 1, 2, 3, 4, and 11. Oh, sorry. The 5, what are they? Profitability. Profitability, right? Profitability, liquidity, and then efficiency, gearing or solvency, market position or investment ratio. Market position, your position, or investment or investing ratios. These are the 5 key ratios. Please, it will be very good if you know how to explain or write a report on this. It will be very good. It will be very good if you know how to write reports on this. Yeah. So that is it. Okay. So what do you do for profitability? Now here they say what? For financial position analysis, we call it balance sheet analysis. For balance sheet analysis, you need liquidity, efficiency, and gearing. This is the balance sheet analysis. Now when they ask you operating performance or profitability analysis, you need what? Profitability and the market position. So these are for balance sheet, financial position. When the examiner asks you, analyze the financial position and you're talking about market position or profitability, count yourself out of the game. I hope you get that. Count yourself what? Out of the game. So this is for financial position. And these two, the one with the star people, they are for what? Profitability. I hope you get it. We call it operating performance. Operating performance. Then you are done. So take note. So if you go to the question, you are restricted towards financial position, balance sheet analysis, using any 2 key ratios. This is not where I'm going to use like a lot of ratios, like all these 3. No. So you have to select liquidity or efficiency, or liquidity versus gearing. You are done. Because the max is 10. Both calculation and the report, the max is what? 10. Good. So that is it. So here we are going to talk about liquidity, efficiency, and then the gearing ratios. Then we are done. Let me see. I think this one, yeah, I write plenty. It's a report that I'll probably go through and then we write the report together. So let me see. Have I calculated this ratio somewhere? Hey, trouble. Have I calculated this ratio somewhere? So I'll just go and copy it and then make it. Okay. Good. Let me see if I can do it. Zanki. No. Okay, so let's do the calculation. So yeah, please, you have to be fast in calculation of the ratio. Don't calculate too many ratios. Please, too many. No, we don't like that. If you pick liquidity, please 2. Efficiency, maximum of 3 or minimum of 2. Gearing 2, you are done. And then here you are picking only 2. Have you seen your selection? Have you seen your selection? You cannot do away without liquidity. So liquidity is champion, must be inside. So liquidity 2. Efficiency, maximum of 3, making 5 ratios. You are done. If you choose gearing and liquidity, 2 here, 2 here, making 4, you are done. Then you move on. How we get that? So have you seen the combination or the mix? Then you are done. So let's go and calculate. For revision purposes, we are going to revise ourselves on all this. But please, you can go through the video on ratio. That one was like part 1, part 2, up to part 18. And some of them are short. Some are 10 minutes, 20 minutes, 40 minutes. Maximum was 2 hours. Good. Maximum was 2 hours. So please, if you go through, you'll be fine. So that ratio between of the fast. Okay, so let's start with the calculation. I'll be fast in the calculation here. This is how the calculation should be. These are the. So it starts. A, the calculation of what? Of the ratios. Of the ratios. Now, in calculating ratios, even the years are 3001 or 4 years or 3 years, put them in column. Put them in what? Column. Table. So it starts name of the ratio. The name of what? The ratio. Here, the formula. It's very important to please you need the formula. And then 20 the years. Yes, 2017. According to the question, which year came first to avoid trouble? Please go according to the question. Why? I'll tell you when you're picking the figures. 2017 came first and 2018. Because if you go and do 2018, 2017, you may end up picking these figures for 2018 and may end up picking these figures for 2017. So take note how they've done it now. No. So that when you're picking, you know that the first one 2017 and that's your first one too. To know what? Yeah. So 2017 and then 2018. If you are calculating for 3 companies, Yamisi, Samisi, Yoli, just write them here like that and then you are done. Okay. Just write the names of the companies and then you are done. 2018. So liquidity, the first 2 ratios on liquidity. So liquidity, current ratio. And everybody know that current ratio is what? Your current over current. Current asset over what? Your current liability is to what? 1. So go to the question and you pick it quickly. So let's do it here. Kindly be with me. I'll close soon. After the ratios now. For the corporate governance, the video is okay. I'll make a video available. Everybody can use it. No restrictions. Okay. So current assets, where are you? Current assets. Current assets. So this is 16,400 over current liability of what? 14,400. Good. So let's go and put it down. So 16,400 over 14,400. Please, is to 1 is part of the formula. The is to 1 is part of it because it's a relative measure. How many times can your current asset covers what? 1 of your current liability? 1. So that's what we call it is to 1. Good. For every 1 Ghana cedi current liability that you have, 1 Ghana cedi debt, how much current asset do you have available to combat it? Good. So that is it. Okay, let's go and pick for 2018. 2018 will be 12,400 against 11,000. 12,400. So 12,400. 12,400 against what? Against 11,000. Yes. Is the 1. Please, what are the answers? Please, what are the answers? Okay. Let me do it first. 16,400 divided by 14,400. That will give us 1.14. 1.14 is to 1. That gives us 1.13. 1.14. So 1.13 is to 1. Good. So that is it. I leave one line. Please leave a line. Go to the next one. quick ratio, quick. You call it quick or acid test ratio. Don't write oh, quick or acid test ratio. Now is equal to how fast, how quick can you pay your current liability. So current asset minus the inventory all divided by current liability is to what? 1 relative measure. Now what do? You still code this one back 16,400 divided by 14,400. That's the inventory. So I'll go and pick the inventory. Is to 1. So 12,400 less something. All divided by 11,000 is to 1. Good. So let's go and pick the. Oh, I should just go straight to the point. Now you've seen the calculation, but the interpretation is also available. Interpretation is also available. Interpretation is also available. So the inventory figure here is what? Inventory. Why? 11,600 and 6,800. Good. So 11,600. 11,600. So 11,600. So what again? 6,800. Good. So think that all of the inventory form more greater percentage. Inventory forms greater percentage of all their assets, which calls for concern. So that is it. So the answer will be, you'll give us 0.33 and you'll give us 0.5. Is to 1. You are done. Now down liquidity ratio. So let's go to efficiency. Inventory turnover. Inventory turnover days, which is equal to average inventory, all divided by what? Cost of sales times 365. It is in days. If it is in month, times 12. If it is in week, times what? 52. What if it's in years? Times what? 1. Because we have what? 1 year in a year. How many years do you have in a year? You have only 1 year in a year. Because how many months do you have in a year? We have 12 months in a year. That is it. Good. So let's quickly. Now there's an issue. Average inventory is equal to open inventory plus closing inventory, all divided by 2. However, in event where the open inventory is not given, do not assume that is equal to 0. What do? Pick the closing inventory. So the closing inventory is equal to the average inventory when the open inventory is not given. So check 2017. 2017, you can't get the open inventory. Yes. If you can't get the open inventory, then don't assume that is 0 and divide the closing inventory by 2. No way, don't do that. Just pick the closing inventory as what? The average. You are done. So that is a rule. That's the average rule. So what do you do here? So I'm running fast. So what do you do here? I realized that for one of the year you can get average. 2018 you can get average. But for 2017 you can't get average. And because of that, all of them must be on common base before you can compare. If you compare average to closing balance, you won't get the interpretation or the performance correct. So what do? All of them now, let's use closing. So I'm going to use closing inventory over cost of sales. Let's go to closing inventory. For inventory figure, you know it already. Cost of 6048, good. Cost of sales 6048. So inventory is here 11,600 over 60,000 times 365. Here will give us what? 6,800 over 48,000 times 365. Please, what's the answer? Here they are not receiving answers. So, that's 11,600 divided by 60,000, 123 times 365. Good. 71 days. Good. 71 days. Yes, what? 52 days. Good. Here, inventory days. For current ratio, the benchmark is what? 1.5 is to what? To 2.5. Here, the benchmark is 1. All the current ratios, the higher the better, the reverse is true. All the liquidity ratios, the higher the better, the reverse is true. But too much of it is bad. So that is it. Too much of it is bad. Now here, inventory turnover. How long it takes you to sell your inventory? If you go and buy goods today, come and put them at your shop. How long does it take you to sell the goods or to finish your stock, to place the stock? Good. So that's the inventory turnover. Ideally, it should take you a shorter period to sell your goods, right? Good. So it means that the lower the inventory turnover days, the better it is. The lower the inventory turnover days, the better it is. So therefore, this one is very good. So now it has also decreased, right? Perfect. Now let's move on. Receivable days. Receivable days or receivable collection period. Receivable what? Collection period is also called receivable days or receivable turnover days. Receivable turnover days. That's another name for it too. So many names, so you are done. Good. Receivable collection period. Let me do the simplest one. Receivable days is also equal to average receivable over credit sales times 365. If credit sales is not there, peak sales revenue, total sales what? Revenue. That will be the most case. Agreed. Perfect. So let's go to the question. So receivable times 365. Now let's see. Let's go to the question. Receivable is what? Okay, the receivable will be receivable figure why is here. 4,800 and 3,600 respectively. So 4,800. So you'll be 4,800 all over 100,000 times 365. And you'll be what? 2,600 over what? 72,000 times 365. Answer. So your receivable days is 18 days. And here is what? 13 days. Good. We are done. Payable days. Yeah, the benchmark is 30 days. When you buy the goods, it takes you ideally 30 days for you to clear the goods from your shop. So it might take you what? Ideally 30 days. That's the benchmark. The benchmark. And here to the shorter the better. But too much of it is bad. Look at here, 13 days. Even though it's good though, it's bad. Even though it's good, you are doing too good. It means that you are chasing your customers for the money shortly. A time will come, the customers will not buy from you because we know that when they buy from you, you are on their neck taking the money. Look at 13 days. They'll boycott you and then go to another place where they can have what? Amazing what? Credit period or favorable credit terms. Good. So you have to find payable days. Is equal to average payable all divided by what? Cost. You have to pick credit purchases first or total purchases. Second, if not total purchases, what do? You pick the cost of sales. Cost of sales. But most of the exam question, it is the cost of sales that will be made available to you. So take note. Except for if the examiner wants to give you the breakdown. They can give the breakdown, you have to pick the breakdown. Good, so that is it. Good, so that is it. Now in this question, we are going to use the cost of sales. So I will make it average payable over the cost of sales. That does not mean that cost of sales is the first target. Cost of sales times 365. Now let's go and pick the payable. The average rule also applies here, so take note. Payable will be why payable. So you calculate fast, and move on. Payable, why are you? Trade payable 6,200, 8,600. Good. So 6,000. Oh, I forgot to know. This one up. Let me go there again. Sorry. 6,200 and 8,600. That's right. 6,200 and then 8,600. And good. Now add this one divided by cost of sales of what? Cost of sales was visit here 60,000 times 365. Yeah, cost of sale was what? 48,000 times 365. Good. So here's what? 38 days, and here's 75 days. Agreed. 75 days. Agreed. Yes, 38 days, right? Is that true? So let's see, 6,200 divided by what? 60. 1, 2, 3. 1, 2, 3. Times 365. Good. That's 38 days, correct? Okay. Now we are done with the payable days. Efficiency, how many have we calculated so far? 3. You can leave it here, 3. You are done with efficiency. But let me add 1, making it 4. Please, you have to select 3. Asset turnover. Asset turnover. Or net asset turnover. Then I'm done with the efficiency. For liquidity, you calculate it for me. Sorry, for GRM. Do a calculation for GRM for me. Then we are done. So net asset turnover, net asset turnover is equal to sales over the net asset. Net what? Asset. The answer is in time. Don't multiply by anything. Because what you do is that you pick the sales. Sales over here is 100,000. However, the net asset is what? Net asset is total asset over what? Current liability. You said, okay, 65 days, good. Because I wasn't receiving any figures, so the figures that I remember, then bring them in. So thank you very much. Divide by, in fact, with the payable days, the longer the better. Yes, because now we are paying, right? Yeah, the benchmark is 45 days. Now we are paying, so it should take us ideally longer days so that we can flex. We can like take our time to pay the funds. So that is it. The longer the better. But too much of it is not good though, because if you continue this game, now it takes you 65 days to pay your suppliers. If you continue like this, when you go, they will name you. Oh yeah, the man is coming, please. Nobody should send to him. When it take longer time to pay us. So much of it is bad. What can cause you to increase? Probably if you're a key customer to that of the entity, it take longer time because you may probably have a high bargaining power of them. So let's go and pick the net asset, total assets plus the current asset. So from the question, we will end around 9:30 and then call for rematch. But then I should have finished the ratios. 30 minutes, yes, we finish. So give me 13 minutes, Madam, because I'm about to start a report. Then you type the common size, and we are done. Okay, so that is it. Now, wait. Net asset. Total asset less what? Current liability. Total asset is what? Why are you? Total asset is 58, 445,000. So 58, 400 plus, and yes, 45. Okay. Oh. Now we already have the current liability on the board, so I'll not look for it. Current liability over here is the 14,400. So total asset plus 14,400. Here to sales revenue was sales 36 plus 36, 72. So here is 72,000 divided by here is 45,000 less 11,000. Good. Yeah, done. The answer will be the payable is 8,600. This payable is 8,600. It's 8,600 like this. Yes. Good. Yeah, there'll be rematch. There'll be rematch after the race. There'll be rematch for the governance and the other sections. So take note. Okay. Okay, so what do you get? So let me see. Net asset turnover, yes. Is it 4.3? 4.37, yes, 1 point. No, it's 2.21. And the answer is in time, so write times against it. 2.21 and then 4.37. The answer is in time, so write times against it. Oh, thank you, Lord. Good. Okay, so you're done with the efficiency, right? Please be keeping the figures in mind, though. Be keeping the figures in mind, because I'll clean the board and start the report right now. So we call it hot report. It's very hot. Please, to get the full concept of ratios, kindly go to the ratio video. There's a question that I've done called Zangi Limited. It's similar to this. Whatever is in Zangi, the same thing is in here. So how I did a report for Zangi, please and please again, go through for me and you'll be fine. Especially, locate the balance sheet ratios. That's the liquidity of Zangi, current ratio of Zangi, then you are done. Okay, good. Okay, so that is it. Good. Okay, now let's see what we can do best. Now let's do the two ratio, debt to equity. Gearing ratio, let me calculate it here, the two. Then let's start the report. You start the report right now, okay? Please don't sleep. If for those of you who are dozing, please, I'm begging you, get some ginger beside you. Bite small, bite the ginger small. Get some ginger beside you, bite small, or some hot tea. Let them bring you some hot tea, okay? You'll be fine. Hot tea. The time that left, you need what? Hot tea. Hey, what I'm giving you guys not coming. Sorry, I don't see you. Okay, so we are going to look at the last two ratios and gearing. Please, to get the full concept of ratio, the video is there. Then we are just answering questions. So gearing ratio, I'll talk about debt to equity. Debt to what? Equity ratio. Debt to equity ratio is equal to debt over equity. So debt over equity times 100. Debt is non-current liability. The non-current liability. What's the debt of this company? 2017 is 4,000, right? Equity is 28,000. Agreed? Yes, for those of you, times 100. That will give us 56,000. 57. 2018. Hey, sorry. Yes, 16,000. And yes, 8,000 over what? 26,000. Times 100. Perfect. So that is it. This was the answer. Yes, 36 dot. No, yes, 30. 30 dot something. Where's the calculator? 16,000 divided by 28. Answer times 100. So 57.14%. 57, not 56. And then this one is 8,000. Any answer for me? 8 divided by 26 times 100. 30.77. Now, yes, interest cover or time interest cover. Interest cover. Anything cover. The number of time you have what strength cover it. So what do you use to pay interest? We use profit before interest and tax. The formula will be profit before interest and tax, all divided by the interest expense. No times anything. Profit before interest and tax is what? I remember this one. No. Let's go to the question. But let me clean that down one. Let's have you have the figures, you give it to me. Oh. The board is not coming proper. Good. I'll be giving the figures. Please don't go. Please don't go. And don't sleep too. Kindly wake up. Okay, so that to what do you do? So the profit before interest and tax, why are you? Profit before interest and tax, 27,800. Yes, 27,800. All divided by interest. Finance cost over here is what? 5,800. Over here is what? 18,200. Divided by 9,600. The answer is in times. You don't multiply by anything. Then we are done. The top of the board is what? Blair. Oh, it's true. Top of the board is Blair. Wow. Okay, let's manage that. We have some few minutes, like 4 minutes to end the game. Okay, so that is it. The answer here will be how many times? Let's be confirming the figures, so because it's randomly selected. So 4.79. This one here to be 1.91 times. Can you add times to it? Answer is in times. We are done. Now let's start the report. Let me end at the report. 4.8 good. Let me end at the report. And then I'll discuss the common size. to end the intervention successfully. Then, whilst we are still waiting for the solutions and in the videos as well. Yeah, good. Okay, so what do you do? Now let's continue the game. Now you have the figures, so kindly get the figures from me. I'll ask them from you. Good. For those who are not copying, I'll ask from you. And someone want to sleep, please don't sleep. Please don't sleep. Yes, I know that the weather is very good for sleeping. But CIB has no memory. They don't know that you are even in COVID. So the civil spares. No professionals don't know that you are in COVID. That's where they even tie the question and make COVID inside. Okay, so let's see. Yeah. Okay, so we are going to write the report. Now, this one says write the report. So we start report writing. Report writing. Now, in this question, either the first part, it will be a one question for 20 marks. First, we are using ratio. Second, we are using what's the name? Oh, this one, what is his name? Vertical, yes, vertical analysis. The man is called vertical analysis because if you see any person, call him vertical analysis. It's called a vertical flexion. If you see a very, sorry, I'm not somebody who catch me and beat me, they beat me. Okay. Now the report. So now on the report. So the calculation. We calculated only two. The report. Please, all the reports must have address. Here is a report, and it's official. It's bare address. So the addresses will be two. Is it to the CEO of who? CEO of what? CEO of what? Of Apesi Papa, right? Or is it the board of directors? Please Apesi Papa. Board of directors. From they have to address you. Sometimes they will address you nicely. They will address you as what? As a financial consultant. So that one, write your name and add consult to it. Target consult. Or target P consult. Target professional consult. Yes. Target what? Target professional consult. Good. So that's target professional consult. Now, if they don't address you, so they can also address you as a finance director. So they write finance director or the accountant, chief accountant. Please, if they don't address you, you can address yourself. Oh yes. If they don't address you, can you address yourself? But if they don't address you, the only address you can do, you can choose is your name, your full name. So write your full name. Full name, Akwesi Ajiman. Good. Akwesi Ajiman. Wow. That's my CEO. I salute you wherever you are. Akwesi Ajiman. Hey. I remember the B. Good. Akwesi Ajiman. The CEO of what? Two big companies, not big companies, two big institutions in the country. They have their CEO, their names are the same. Ghana Tourism Authority and the ICA, both of them, their CEO are called Akwesi Ajiman. All of them two are my boss too. So let's see. Now let's see something here. 2 from date and subject. Good. Please, from now on, all your dates must be 13th of what? July. To avoid what? Because you go there, that's why the date of examination. Date of what? Examination. So from when they catch me, I'll be in trouble. Let me change it fast, man. I don't want trouble. Joel. Yes, that's all. Joel, I don't want trouble. Now 13th of what? 13th of July 2020. These are all the dates. Please, these are the dates must be 13th of what? July 2020. Perfect. Or July 13th, 2020. Please, you don't do something like this. Raising the TH app. This one is computer handwriting. It's computer that write like this, not human beings. Good. And it's computer, there is copy. And you don't want to see this, the shortcut version of date 13 like this 07/20. No, this we don't want to see. Please go to official date. You are done. Because this is a report. This official report to the CEO. Hey, for the CEO asks you write a report to me. The way you'll be happy. Yes, CEO will see that you are there. You are there. So it's official. Subject, please summarize the requirements. Subject, summarize the requirements. Subject, summarize what the requirement. You can tell the examiner that the subject is what? The financial position analysis of what? Of Akwesi Papa. So financial position analysis of Akwesi Papa Limited. Akwesi Papa. No Akwesi Mama. Akwesi Papa Limited for the recent years. For recent years. We are done. Now all reports must be introduced. So introduce your report. So introduction. Please, then you can have introduction. Now the introduction, don't write plenty, please. Even do not write 10 marks. If write plenty, you'll be in trouble. If write plenty, you'll be in trouble. Because we are going to write two sets of analysis. We are going to run 2 sets of analysis under the same question. Analysis using ratio, analysis using common side, different, 10. So I'm going to write all here. You'll be in trouble. So kindly take note. Now be with me. Introduction. At least give her 3 sentences. Or maximum 3 sentences for examination sake. 3 sentences for the introduction. 3 sentences. Sentence number 1. Tell us the purpose of your report. Purpose or the objective. Reason for the report. Why are you writing the report? Purpose. Sentence number 2. Tell us the type of report you are doing or type of analysis. Type of what? Analysis. But there are so many analysis or so many tools. /2 that you are using. You can use ratio, common size. Sentence number 3. Tell us one like this. One limitation of your analysis. Limitation. Sadan. If there's any exceptional item in your question, kindly bring it. If there's any exceptional item in your question, kindly bring it. Wow. I like how your game has what elevated. Yes, please don't quench it to keep it up. But for those of you who are sleeping, the app is just on to just representing, but in person No, accent. Please, I know, I understand that the weather is very good for sleeping, but don't worry, finish one, okay?
Okay, so that's the introduction. So we start. Sometimes it's true. Somebody will report himself right now. It's true. Hey, I said that too. I said that somebody will report himself. Oh. I said somebody will report himself. Oh. Yeah, so in fact, let me check. I know someone. That person might be sleeping by this time. Let me check if the person is sleeping. The person I know, the person who will respond right now, that he says he's not sleeping. Let me check. Let me check. The person is around. No. If you see my hi and you don't respond, meaning, hey, I said it. The person is gone a long time. The person is not even know here. The person is not even here. Yes. But by now, getting late. Okay, so that's fine. Now, the introduction. So who can start with us? Introduction. Introduction of the report. Please don't write plenty. So first, purpose. This report seeks to analyze the financial position of what? Of Akwesi Papa for recent years. Full stop. We are done. That's the first one. If sometimes, now let me show this question. Yes, for illustration purposes. Question like this. Now check this. Prepare a report to the investor, advising him with reasons which of the three companies he should invest in his fortune. His fortune, yes. She invest his fortune. My screen wasn't coming clear. Good, that's it. Now here he said what? Write a report advising him. So you analyze first and make what? Advice. So such a report, the introduction will be like this. This report seeks to analyze the financial position of these companies and recommending which of them the investor should be what? Should invest in. So something like that, then you are done. So that it will be, your report must be tailored to the question. So thank you very much. Now let's move on. I like the vim. I like the vim. I like the vim. I'm clapping for you. Yeah. You guys are energizing me. I'm clapping for you. Please, if you sleep, I'll take my clapping back. Even though I can't see you, if you sleep, the app will detect those who are sleeping. Should we try so that the app will detect those who are sleeping? Okay. I'm sending hi individually. If you see my hi, if you see my hi and no response, meaning the phone is somewhere or the phone rather is watching the owner. Okay, so that is it. Now let's move on. So the first sentence, we are done with the first sentence. Good. Now the first sentence, these reports, or sometimes to the examiner will be a bit practical. They will tell you like this. You and your CEO, you are the finance director. You went for a recent meeting, maybe board meeting, whatever. And then your CEO has been asked to come and analyze and defend the position of the company in a group board meeting. So they write them. So when your CEO came back to the office, write a memo to you or a report to you, dated. So in the question, the examiner will quote the memo that the CEO wrote to you, and then in the requirement asks you, required.
Respond to the memo above or the report above by writing, by analyzing the performance of the company. Such one, it's a practical. It means that it needs practical introduction. Have you seen? Good. Unlike the exams ones, like straightforward. I said this, write a report. Sometimes we will introduce you. Oh, you went for the meeting. You were there. You have discussed it, and now you've agreed that when you come home, you are going to write a report. Good. So that one, you make it what? Practical. So, as requested or as discussed or per the memo, following the memo received, this report 6-2. So something practical. I'll be get that. But most of your exam questions do not do it like that. Only few examiners do that. Only few examiners do that. I think I have a question like that. I have a question like that on my machine, but where it is now, dear, I'm unable to find it. So when I find it, I'll just share. I'll share with you. Question like that, which was very practical. Good. Do I even have it here? I should have it too. Now let's move on. So the introduction, it will be this report seeks to analyze or evaluate or assess or appraise or seeks to analyze the financial position, of what? Of Akwesi Papa Limited for the recent years. Full stop. That's the sentence one. We are done. The purpose is written. The purpose. Sentence two. What type of analysis are you doing? For the A part, we are doing ratio analysis, and then we are using a 2 key ratio. So let's see. The report will be based on the report. So the type of report we are doing. The report will be based on trend analysis. The report is based on what? Trend analysis. Now, if you are doing this question, for instance, this question. Now, and the report will be based on intercompany comparison. Have you seen Zamina, Yomali, Zamisi? I hope this one I had right there. Good. That's one. The report will be based on what? Intercompany comparison. Good. But over here is trend. This one is what? Trend. So that's why at least if you go through these two questions, I think it should be fine. Good. So the report will be based on what? Trend analysis. Trend analysis of Akwesi Papa from 2017 to 2018. Using the following key ratios. Using what? The following key ratios. Then you start. Liquidity, efficiency, and what? Gearing. Liquidity, efficiency, and what? Gearing. And this will be explained in 10 or in subsequent paragraph. So I'm done with the type. Let's go to trade. Let's go to the trade. Trade, tell us at least one limitation of your analysis. If you go to the exams and then the question there is trade like one, tell the examiner like this. My analysis is limited to what? Changes in accounting policy over the period. So limitation, changes in accounting policy may render my analysis invalid. So changes in accounting policy may limit my analysis. So my analysis is limited to what? Changes in accounting policy. However, if the question is not trend analysis and it's intercompany comparison, we can't call the same. So a question like this, this question. Zamina, Yomali, Zamisi. That one, it told the examiner that my analysis is limited to what? Selection and application of different accounting policy by the company. Here, if all of them select different accounting policy, my analysis will be limited because I'll draw it from a different base. So that's how it will be. Good. So that is it. So you are done. Now I'm done with the introduction. Good. Now let's go to the body. That's where the issue is. The body of the letter. That's where the issue is, so the body of the letter, then I'm done. I'll pick 1 or 2 ratios. In fact, these ratios, I've explained them. It's the same as the Zangi. So go and pick the analysis for Zangi on the YouTube, and then that's all, you are done. I think they're one of the ratios, one of them, and then you are done. Okay. Then I'll just explain the common size. I'll explain the common size. Now the body, we start liquidity. You have selected 2 to 2 ratios under each. Selected 2 to 2 ratios under each. When you start, right, liquidity. Liquidity. Now, before I go to that, now let me highlight something small about this. Sometimes examiner, he can ask you that write a report like this one, only one report, in which part of the report you are analyzing the company's performance using ratio over here, and the other side of the report to you, in the same report, you also analyze the company's performance using what? Using common size. In that matter, that one, when you go to the type of your analysis, in that scenario where all these 2 questions are in the same report, yeah, make the ratio to be a report, and then the common size what? A memo. By next time, you can make all the 2 come together. When all the 2 are together, don't worry, only one introduction. So that one, when you go to the type of the report, you say that this report will be based on what? Trend analysis using the following key ratios and common size analysis and common size analysis. Just mention common size inside. Then in the body like this, you start ratio analysis. Talk about it, then go to common size analysis, then you are done. So that's how it should be. Okay. Now liquidity. When you pick liquidity, first paragraph. Oh, sorry, that part is not coming in. Sorry. When you pick liquidity, you are starting with the body. First paragraph. Please explain liquidity. Tell us what liquidity means. Okay, something small. Liquidity. Your second paragraph, please. Your first ratio, maybe the current ratio. Your second paragraph. Your third paragraph should talk about your second ratio. That's a quick acid test ratio or quick ratio. Your quick ratio. You are done. Paragraph by paragraph. You are done. So it means that we are going to talk about 2 key ratios. We are going to have 6 paragraphs for the body. 6 paragraph for the body, and then 1 paragraph for the introduction, making 7, and 1 paragraph for the conclusion, making what? 8. So 8 paragraphs, and all of this plus the calculation of the ratio himself, valid for what? 10 marks. And you say you're going to write plenty. Okay. The marks is fixed and it's constant. Whether you write 2 pages, 3 pages, it's still 10. Do not change the mark. They're not going to mark you 20 over what? Over 10. No. So please take note. Now, if you pick each of the ratio, in fact, yeah, or whatever I'm going to tell you is the same as what I've done in the note already. So the Zangi, so that use that one for me. Okay. Time is fast, friends. Now, when you pick each of the ratios over here, current ratio, 4 items we need from you. So in this paragraph, we're going to write 4 items. 1, the first one, tell us whether there has been a change in the ratio. Change in the ratio. So, for instance, the quick ratio. The quick ratio increases from where? 0.3 to what? 0.32 to 0.5. They say that the quick ratio, I'm explaining quick ratio. So the quick ratio has decreased over the period. That's all. Change means increase or decrease. That's the meaning of what? Change. Increase or decrease. That's the first thing you have to tell us. 2, tell us the meaning of the change. What does the change represent? Meaning of the change. What does it mean? So if quick ratio increase, that means that the company is doing well, they are doing bad. Meaning of the change. Meaning bad or what? Good. Bad or good? Or good or bad? Which one now first? The guy. Good. That's the meaning of the change. That's the first thing. Sorry, the second thing, the meaning of the change. Meaning of the change. 3. What caused the change? Reason. Wow. What happened? This is the heartbeat. This is what we want. Change, you're able to know that the thing is moving. Reason. What caused the change? Lastly, tell us. Impact or recommendation. Impact slash what? Recommendation. Impact or recommendation. Recommendation. Then you are done. So if you pick your first paragraph, you're talking about liquidity in general, and I've done it. So please take note. If you pick current ratio, what you do is this. You start. Current ratio has decreased slightly over the period. This represents a slight deterioration in liquidity. This is as a result of the decrease in current assets, although the current liability also decreases. Full stop. Done. Quick ratio. Quick ratio measures how fast the organization can pay its current liability as and when they fall due. How fast, how soon, how quick can you pay your short-term debt as and when they fall due? And this has what? Increased over the period, which represents an encouraging trend. Although the quick ratio has increased from 0.33, although the current ratio has increased over the period, the ratio of both years fall below 1, which calls for a great concern and hence pose a liquidity challenge or liquidity threat on organizations' financial health or financial stand. Full stop. This is as a result of Akwesi Papa having more of its current assets as what? As inventory. For both years, Akwesi Papa's current inventory are more than half of the current assets, which suggests that Akwesi Papa may not be able to convert this inventory into what? To cash, or convert them to liquid funds or liquid assets to pay its short-term debt as and when they fall due. Full stop. Impact. Recommendation. So and you are done nicely like that. Okay. Then you give overall, and then you do like that. Go to efficiency in that order. So we are done for it. And give finally, then we give what? Overall conclusion. You sign and write your name, your full name. You sign and write your full name. Most students don't sign and write their full name. They don't even conclude because time might not be on their side. So that's it. Now let me scan through the common size analysis. Hey, they are going, oh, please, they are going. Please don't go. I'm going to do the heartbeat. The common size is a new area. When I'm finished that one, I'm done. But I am exhausted more than you do, please, so don't go. And don't sleep too. For those of you who are sleeping, I start mentioning names. Yes. Yes. It is you. Yeah, listen. Small, but the phone is not with you. The phone is somewhere. Yes. Hmm? I finished about this. I'm not so. Hey, I'm in trouble. Danger is here. Danger is here. Danger zone. I'm in danger zone. Okay. Good. Okay. Not at all. Rosie. Not at all. But some people are sleeping. Rosie, some people are sleeping. You are not seeing them. Rosie, some people are sleeping. You are not sleeping. You are not seeing them. They are sleeping. Look at the time. Look at the weather. Very good for sleeping. Actually, very good. Oh. No. I've been what? Energized. Yes, I've been energized. So now let's go. Please, we are doing this until daybreak. Oh. I don't want to go now. I'm doing it until daybreak. So you get some coffee, you can get some coffee by your side. Then you continue. Okay. Now I'm going to explain the common size, then we are done. The common size, then we are done. I'm just going to explain how you go by the common size, the new thing, and then you are done. Okay. Okay, so I'll just explain the common side, then we are done. And now I'll use the Excel to do. Excel will do it fast for us. We finish right now. No. Okay. Now using common size, which is same as what vertical analysis, right? And evaluate the performance of the company. Yeah, they say what performance. This is the financial position. Performance means you are doing everything. We have operating performance and financial position. Operating performance is what? Just the profitability issue. Financial position is the balance sheet issue. And then what again? Good. Now let's see. Okay. Please, you build that. So. Now, common size simple means you are going to express all the items in the financial statement. Hey, they are going to. Hey, they are leaving the platform where we have reached the interesting what? Unprinted areas where it's like cause for great concern. Now, common size simple means common. The size is what? Common. The base is common. Okay, common size simple means we are expressing all the items. So assuming that your sales revenue, your cost of sales, gross profit, sales is just 1,000. Let's assume it. Here is 200, right? Gross profit to be 800. Gross profit is 800. Operating expenses, let's say 500. Let's make it 600. Your profit to be what? 200. Oh, sorry, that part is not coming. Oh. Sorry. Common size analysis, vertical analysis. Here we are going to express all the items in the financial statement as a percentage of what? A common base. Now for profit and loss, this one is profit or loss. Common base is what? Sales. Common base is what? Sales revenue. So pick all the item divided by sales times 100. So what do you do? So here will be what? Here will still be 100%. Agreed. Here will be 100%. Here will still be 100%. Here will still be what? 100%. Now, when you come here, here will be 200 divided by what? Sales, which is 1,000 times 100. That will give us 20%. 800 divided by this, that will give us 80%, 60%, and what? 20%. So this is what we mean by common size, called vertical analysis. The thing is vertical like this, it's straight, unlike horizontal, that move like this. Okay. Good. Hey, please, they're sleeping, no. They're dozing off, no. Yeah, do small warm up. Let's do small jogging. Let's do small exercise. Yes, I'm up now. Let's do small exercise. Small exercise. Let's do small exercise. Small exercise. Let's sit down. Let's continue. Now, for common size, pick each of the item, each of the element, divide by the common base. Common what? Common base or common item. For P&L, profit and loss, the common base is what? Sales revenue. For balance sheets, the common base is what? Total assets. So that is it. So you pick this divided by this times what? I'm going to put the answer down. You are done. So that is it. When you're done, then you write report on it. So that's the idea of the common size. Do I have something like that here? Yes. Please, here you don't need to show working. So in this question, what you do is this. I'll do the first one for you, then you complete it for me. Then we are done. Okay. Wow. Wow, you guys have done well. Wow. You know why I'm clapping for you? It's time for you've done well. Only few of you are sleeping. Only few. Only few. Only few. You've done well. You've done well. You've done well. And now let's move on. Let's go to the question. Common size. So it means that you pick for profit or loss, you pick each of the item here, divided by the 8 sales, and then multiply by 100, then write it down. How we get it? Please, here we don't need the formula. No formulas. Here, no formulas. Here, no formulas. Please, here, no formulas. Why? Because the formula is only one. Why the formula is one? We don't need it. No formulas. So you start. Calculation of the percentages. So B, calculation of the percentages. Like this. Oh, sorry, that part is not coming. Calculation of what? Percentages. Hey, Rosie. Rosie, you are tired there. No, I'll close right now. I'll close right now. That's what I'm clapping for you. Down well, down well. That's what I'm clapping for you. We finish right now, okay? Don't worry at all. We finish right now. Don't worry. Now, it's a calculation of the percentages. You start. You copy the question in order. We have sales revenue. There's cost of sales. There's gross profit. Up to what? Net profit. That's the profit after tax. Antipart. Good. Now you come here 20 what? 17, 20, 18. All what you have to do is this. Take your calculator. Please, this one there. When you finish, then you sleep. Please. 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 This one, when you finish it, go is people. What do you do? Common size. Pick. Please, here, let me give you a trick or a strategy. Do 1 year first. Other than that, to confuse you. Do 1 year first. Pick all the item divided by sales. For profit or loss divided by sales times 100. So sales always should be 100. That one there's a must. That's the base. So cost of sales for 2017 is 60,000. So 60,000 over 100. So that will give us 60%. Gross profit to be 40% in that order. Down. I'll be get it. So for here to be 60. Now let me go to 2018. 2018, the common size for cost of sales will be what? For cost of sales, 2018 is 48,000 divided by what? 72 times what? 100. Common base, common size. The size is common, the base is common. Good. So what do? So to be 48, let me do the workings here. That one, just pick your calculator like this and calculate and put the answer in. Good. So that will be 48,000 all divided by 72,000 times 100. So 48 divided by 72 times 100. That's what? 66.6. So 67. Let's make 66.67. Please do one first, because all of them, the sales figures are not the same. It will confuse you. Please and please again, do one first. Finish this one first. Relax for 1 second. Come back again. Come and finish this one. How do you get it? Good. Hey, sorry, cost of sales right now. Cost 66.67. Now what do? You come here. Then you write here will be 13. No, 33.33. Good. So that is it. So that's the calculation. You do this right after the profit after tax. That's it. Then you move on to the next page. Then you write financial position. You can also have common size for financial position. Okay, common size for financial position. Please, this one, I know for sure that where most of you are dozing up, it will call for rematch. Okay, rematch for this particular topic, right? Because it's a new area that's popping up. Good. So that one to start, non-current assets. 2017, 2018. You pick non-current assets, divide it by what? The total assets. Total assets. Financial position, common base is what? Total assets, which is the same as equity plus liabilities. Good. So that is it. This is unfortunate, but this is how far the good Lord bring us. So you continue the calculation. Each report is not all that difficult as compared to the ratio. The report on the common size is not. So we start by saying this. In 2017, no, let's do the 2017 from there. The cost of sales to sales ratio, that's the cost of sales margin, or the cost of sales to sales ratio has increased over the period, leading to a decline in the gross profit margin. Leading to what? A decline in what? The gross profit margin, like this one. Then you continue like that in that order. So I'm just commenting on the percentages. Anywhere you see that it's more, if you see that the expenses to sales are high, it means that it will reduce the profit. The impact that will reduce your profit. Your profit will be low, and then you are done. Good. Okay, my people, this is how far the good Lord will bring us. On that note, we'll continue again when we meet. If you have any question, kindly ask. Any suggestion, contribution, then let me have it. So, so that will be a full version of the common size up to the corporate governance section, and then the other optional section. That date or that day is not yet communicated. I want everybody, so that you can get everybody, all what the intervention people, so that you can get. So basically, that is it. If time is there, we could have gone further. For me, I'm willing to go further, but most of you are sleeping. So most of you are sleeping. The time will be out, and then I'll tell everybody once when there's a platform. When there's a platform, I'll let everybody know to just write the report on the common size. Please, on assumption that everybody has calculated the common size. Let me show you how fast you can do this. See, Excel can do it better for us. Excel can do it better for us. I have one here. I did it for I think one of the companies. If I find it, I will let you have a look at it. Where is report on Unilever. report on number. Okay, that one's it's not on this PC. Okay. Okay, so now let's see how you can do this. Now look at what you're going to do. Please use your calculator. Use your calculator to calculate it for me. Now this is what you do. Just locate. Excel will do everything for you quickly. But in exam they know Excel. So good. Okay, so this is your company. This is your company, right? Let me just copy this figure here. Just copy this figure here. And maybe start from the top like this. So let's assume I'm just going to do for this one. Good. Good. Please try and get the answer correct too. Please try and get the answer correct. Okay, so that is it. Hey, that not scattered though. So this is what I'm doing. If you are going to use manual, your calculator to do the calculation. So this is what will happen. So I'll do the vertical analysis here. Good. Here we don't need how to call it. We don't need working, so I'll not do the working. So all I have to do is just copy this section. Go and paste in the second sheet. Then I'm done. Let me start from here so that I can get a clear. No, sorry. Trouble come today. Good. Now when you start like this, it's equal to. So I better equal to sign. Let's see. Then I'll come here. This guy divided by this guy again. Enter. That's one. On my answer in percentage. So you come here percentage. So that's 100%. Okay. Good. Then you go to the cost of sales. Cost of sales is equal to. Please, you are using your calculator. I'm not using Excel. It does not give you Excel. So take a look. So this one. Divided by. Oh, that is not coming. It's not coming. No. This one. Divided by this. If I get one correct no, good. 60%. Answer should be in percentage. Then I do like this no to give you all of them. Good, you're done. Give you all of them. Then we continue the show. So please, this is how to be. Okay. So don't need to worry. Don't need to worry at all. And please practice for me. The last aspect that we've not done is the corporate governance. Why corporate governance? Why are you? Last aspect we've not done is the corporate governance. It's a corporate governance. Now corporate governance to then the questions are here. So and then the act. If you don't have the act, please don't get the act. But the one the answer should come from the act. So this is it. So can we go through and then you'll be fine. This is a question on the corporate governance. Good. So all the solutions are, in fact, on the next page, this one is page 6, page 7, page 9. This one is page what? Page 6 of the act. This is a page 7. This page what? Page 9. Okay, so that's it. Good. Okay, so let me leave. A lot of people are tired. In fact, they are tired. So you okay? Everything will be fine. After the exams, chill well. To cancel all the fatigue, all the tiredness from you, then everything will be fine. Okay, so we will meet when we meet. Okay, so if there's any question, kindly let me know. Any suggestion, contribution, advice, and thank you everybody. Please, my humble plea or suggestion, if you have not subscribed to the page, kindly subscribe to the YouTube page. I'm begging you. If you have not, kindly subscribe to it for us. Like and share the page. Good. And thank everybody for coming. Okay. And do the recommendation. Rose, you have a question? Rosie, raise your hand. I have a question. Okay. So, Rosie, kindly ask your question. Okay. Kindly ask your question. Unmute yourself and ask the question.
Hello, Fred.
Yes, I can hear you.
Okay, thank you very much.
Yes.
There is one thing we are asking for. You
Okay.
promised us a video standard.
Yeah, the video for standard, the 5 standards, or the IS36 impairment and then the tax. Well, the only one that is no video is the impairment. I think I will do one. Is it tonight or tomorrow? Is it tonight? Okay, I'll do one during the week and then forward it to you. Or do all the standard, the 5, not all, 5 standard, the one that comes. I'll do it and forward it to you.
Okay.
Most of them you have it already. IS40 is available, IS16 available, IS12 available. What is not available is IS36 and IS38. So the 2 standard that's not available. And now the notes are there. IS36, but the notes I have it here. Friends, if I can forward it to you. Okay. Any other questions, suggestion, contribution, can you let me know? You're welcome. Any suggestion, addition? If you want me to continue to day break to, why not? We can continue, please. For those who want to score 20 over 20 or 100 over 100, please can we continue? Oh, we beg. If I beg you, let's like, okay. I think I used tonight to compile the solution and then forward it to you. Once you get the solution, you'll be fine. Because okay, so thank everybody. If you guys are not there, Fred is not there, so I really appreciate you very well. And we try our maximum best. Please kindly go through all what we have done. In fact, let me do something here.